All right. All right, everyone. Welcome to the third annual RevTech Summit. My name is Billy Bateman, co-founder of Signals. This is the third year that we've hosted this event, and really excited to welcome you all here. We've got over 2,500 people have registered to participate in the event. It's free if you're watching on LinkedIn or YouTube Live and you haven't registered to get access to everything. Go to revtechsummit.com and you can get access to everything. And we've got attendees from all over the world, companies big, small, all the Fortune 100 down to startups. Love having you guys here and really excited for what we've got in store today. First, I want to say thank you to our sponsors, Tenbound and VIB. Couldn't have pulled it off without you. They both do great work. Go check them out. They're there to help you in your go-to-market motions. Okay, so today we have over 35 speakers. We've got a lot of great companies, including Demand-Based, Go-to-Market Partners, Tenbound, VIB, Revenue.io, Lavender, Metadata. Great companies sharing their insights with you on what's working for them. For some of the agencies, what they're seeing is working for their customers. And then our tech partners, what they're seeing works for their customers and how they're adapting to today's environment. Okay, so let's just go through the schedule really quick. After I wrap up here in a few minutes, we are going to have our keynote with Sangram and Dave. And then we're going to have a few live sessions throughout the day. And so after that, David, then Steve, Shiv, Shannon, and Dorian, John, and then we'll wrap it up here with some closing remarks. So all of the live sessions are going to be on revtechsummit.com, but also on LinkedIn and YouTube. You can just go in, watch things there on demand for the live sessions. Now, we have a lot of other sessions that are going to be released at the top of every hour. And those are on demand for the next 30 days. You can pick and choose what you want to watch, what you think fits best with you. Tons of great content there. And go to revtechsummit.com to access those if you're not already there. Okay, so before we get into our keynote, we do have our awards, and really excited to present those. We had over 60 people nominated, and podcast is a new category that we've done. And just want to say congratulations to all the nominees. We just took the top 3 vote getters for each category, and those are going to be our winners. So we'll get into the winners. All right, for RevTech Visionaries, Declan with Strategic ABM, Nick from the Grounded Company, and then David from Tenbound were our top 3 vote getters. Congratulations to you guys. Okay, for podcast, the Let's Talk ABM podcast, Cheat Codes, and then the Marketing Ladder, all great listens. And then for Revenue and Data Scientist, Joe and Craig from Strategic ABM, congratulations, and then Shelly from Credit Karma. And last categories are RevTech or Tech Stack Architects. So Lucy with Strategic ABM, Matt Hines, and then David Pearson with LiveView Technologies. Congratulations to you 3. All right, last thing before getting into our keynote is we got a book for you. If you're on revtechsummit.com, you can download the 2023 Marketing and Sales Ultimate Strategy Guide. A lot of good insights in there to how we adapt to today's economic environment and what's working, what's not. And then if you don't want to take notes during all the presentations, we're going to do it for you. And so here after the event, you're going to get our 24 RevTech strategies and trends. And we're going to take the best nuggets from every presentation and put them all into one book for you. And you'll have it there. Just watch for that in your inbox in the coming weeks. Okay. So for our keynote, we've got Sangram and Dave, 2 visionaries in our space. Sangram, founder of Go-to-Market Partners or GTM Partners, author of Move, which was a Wall Street Journal bestseller. If you haven't read that book, you definitely should. I've read it. I've listened to it. It's great to be reminded. And then also co-founder of Terminus, and he was CMO at Terminus and also at Pardot before Terminus. Then we've got Dave Elkington. He was founder and CEO at InsideSales.com. co-founder and a board member of Silicon Slopes, and on the board of trustees at Utah Tech University, and sits on a number of other boards. And I'm told also generally a handsome dude. They're going to be talking about go-to-market motions, trends, and technologies. And in just 1 minute, you'll be in for a real treat with those guys. And until then, just hang on for 1 minute, and then we'll get those guys on. Okay, enjoy the summit, and we'll see you at the end of the day.
So very, very excited to be here with Sangram today. Thank you, Billy. I did have to pay him a little bit of money to give me the generally handsome guy. That doesn't come free. Just so if all of you want to know Billy's price, just give me a call. I'll tell you what it costs to get that on a live event. But look, Sangram, thank you. Like, so excited to have this conversation. Blown away that you're willing to do this. Very, very generous. Just so everybody knows, Sangram is kind of a big deal. And so he's authored 3 books, both a Wall Street Journal and a USA Today bestseller. Billy mentioned he was a co-founder of Terminus, has been involved in countless go-to-market turnarounds. He's been, he hosts one of the largest, I would say, revenue, technology, and revenue related podcasts. Flip My Funnel. If you've not seen it, you should go listen in. He's also one of the top 20 B2B marketing influencers in the world. I mean, look, dude, so it's so excited to have you on here, have you involved. And before we get into the conversation, I want to give a little bit of background. So for all that are watching live, and again, we're live on LinkedIn, we're live on YouTube, we're live here, obviously. So just recently, within the last year or two, finished the book Move. We're going to talk a whole bunch about that book. It's a great book. I read it once in preparation for this, and then I was like, no, this is really good. I'm going to read this again. Like, I got to make sure I actually understood this, because most business books, as you guys know, have like one great idea. This is not the case. Like, this is a very, very dense book. So if you like the conversation today, which despite maybe my engagement, I'm pretty sure you will, go buy the book. It's actually very, very reasonably priced on Amazon. We'll make sure the link is available. It's a fantastic book, and again, he's not promoting it. He didn't tell me to promote it. It's a great overview if you're running into these kind of problems. And after having read it, everybody is running into these problems. So it's not a small thing. So first of all, again, thank you. Super excited to have you here. What made you think to write another? So again, this is your third book. Why did you decide you're like, okay, I'm crazy enough to sit down and try and write yet a third book? Like what drove this?
Well, Dave, first of all, thank you for saying all that. And again, if anybody wants to know Dave's price, let me know for promoting my book, and I'll let you know. But I'll go back and tell a quick story. My dad was a professor of economics, and I remember he called me when I was like 9 years old. And he would pop quiz me, like, all right, tell me the spelling of friend and tell me the spelling of stomach. These words were really hard for me to spell out, and I'll make a mistake. And he passed away a few years ago, and I think he would be turning in his grave, knowing that I wrote 3 books because he knows that it's so hard for me to write. But here's the thing: I learned this the hard way, Dave. That I'm not a writer. What I am, I feel like, is more. I carry the message of it. So when you talked about go-to-market and the fact that it's dense and it has a framework and it gives you literally scorecards and templates for you to do it, because as an operator, I feel like I need that. I need that to run a better company. I need to figure out what's the efficient. We can read all blogs in the world every day, but we need templates. We need resources that we can just go in and implement. So the third book came about right at 2019, 2020, right during the COVID time. And the genesis of that was our company at that time, as a founder of Terminus, we were going through all the same challenges that, as you said, everybody's going through right now. When we hit 5 million, it felt like, oh, we arrived. And then next day it felt like, oh my gosh, we don't know what we're doing. Then we got to 10 million. Then again, we felt like we are entering into this valley of death that didn't make sense at 10 million. And what's wrong? Everything seemed to be working until last week. And what happened? And people don't realize sometimes that your company, you have to reinvent it every few years. So your go-to-market has to be reinvented. You can't play the same playbook every 5 million or every 10 million. It actually completely changes. And I was blown away with that reality. So I started just interviewing and talking to the people that led to the book. And somehow go-to-market is now becoming one of the key areas that every company is overtly communicating and saying, we need to figure this out. Things are changing faster than we can handle.
So I want to hit a couple of things that you said there, because it's so important. Every company, as you grow, there's these like thresholds that once you do it, everything you did that got you there kind of doesn't work anymore. Not entirely, but to a large degree. And every entrepreneur who goes through this evolution literally has to remake their company, because again, just making a company that can get to 5 million, it's like once you've done that, you're like, okay, I got that. I'm going to go do that again, which is why you see a lot of entrepreneurs and frankly, a lot of leaders and a lot of salespeople who are like, okay, we're going to sell the company. I'm going to go do this again. So a lot of people are just self-aware and they're like, I'm done. But if you have ambition to build a $50 million company or a $100 million company or more, you need playbooks. And what usually people do is they're like, well, okay, I'm going to for a couple of years, I'm just going to jam this solution that I did before. Companies flatten out, sales leaders plateau, marketing leaders plateau. And then eventually they transition, or finally someone helps them who knows that new playbook. So what you've given here, and we're going to talk about today, is this. It's literally a framework with templates and things like that. So let's start with first the question, what is GTM? What is go-to-market? Because it's a little bit of a vague term, right?
It is. And funny enough, like in the interview process, Dave, and I think you're going to love this, that we interviewed a ton of CEOs, like Brian Halligan when he was the CEO of HubSpot, Nick Mehta, Gainsight, ton of investor, Kelly Ford, who runs Edison Partners, Jason Green, all the way. And then also CMOs, tons, like Megan Eisenberg, Sydney Sloan, and many others. Here's what's interesting, without taking names of others that I clearly did not take, we'll ask the CEO who owns go-to-market, and they won't even blink an eye. And they said, of course I own it. Like, what do you mean? I own it.
Of course, I love that.
Right? And then we go and ask to a CMO or a CRO of the same exact company, hey, who owns your go-to-market? They're like, I don't know. That's a good question. Maybe we all own it. And you know the answer to the question when somebody says, oh, we all own it. Nobody owns it. So this is to your point. The reason I bring that up is because yes, it's hard, it's messy, and sometimes because it says go to market, a lot of times people think, oh, it's a marketing thing, it's a product launch thing, or maybe salespeople might look at it and say, well, it's maybe the channel thing or SDR play or AE and outbound. But in reality, I think Brian Halligan gave me the best answer to this, and I can expand on it if you want, but I put that on the back of the book, and that's his quote. When I asked him that question, he said this to him. First of all, like, he thought for a second, and then everybody got to know Brian Halligan, he was the CEO of HubSpot, going from zero to $1 billion business, went through IPO for SMB and now even mid-market enterprise they have, as you know. And there's so much things that have happened, and they have created this huge community inbound. So all these things. And I'm asking this guy, so this is not someone who just came and became a CEO. He's took the company from zero to public. And he thought about it, and he said, Sangram, I think go-to-market, if he has to define, he'll define it like this. Like, go-to-market is like a product. You have to constantly iterate on it every day, every week, every month. It's not a strategy session that you have at the end of the quarter. That's not go-to-market. Go-to-market is iterative. And the reason he said I, or the CEO, owns it is because who ultimately can make decisions like, should we go in EMEA or should we stay in North America? That's a go-to-market decision. Most people don't elevate the go-to-market decision making to that level. Or, oh, should we give money to more money to marketing, or should we spend more on hiring SDRs or AEs? That's a go-to-market decision. Your marketing and sales leaders can't make that decision. Are we going to go to a partner route, or are we going to acquire a company? So I think what I have learned in the process, and I hope this book and this conversation helps people think about, is that go-to-market is much more elevated than what most people have thought over the last couple of decades.
So I want to challenge a little bit. And I look, I agree. The CEO has to own it. But, you know, at the end of the day, you need, I guess traditionally, a lot of people thought the CRO, he owns the number. And like, is go-to-market mean revenue generation? Like, who owns kind of the revenue growth? Or is it the CMO? Like, a lot of people think like it has the word market in it. So this is a marketing related term. So I probably agree with you.
Yeah.
But who, you know, at the end of the day, the CEO needs one neck to choke in terms of like, I got to make sure we hit our number. So like, who is that?
Oh, that's a good question. And we run polls on it, and we are doing this go-to-market roadshow, and we have a room of people, and we'll ask this question like for fun. When, you know, if I had people in front of me, I would say, oh, raise your hand. And every time I'll ask this question, most people would say, oh, I think the CMO owns it. Like, our data shows, since we're an analyst firm, we're doing a lot of research on this. Our data shows that 77% of the go-to-market leaders saying marketing owns it. So it's very much there. It's very much challenging that status quo, saying that, no, you don't. You can facilitate it. You can bring those conversations to it. The CRO has a revenue number, but the decisions that go-to-market really means has to be at a higher level than you, because if every marketing can change the compensation of a sales leader, or a sales leader can change the compensation of marketing leader for a specific outcome, then then maybe you can. But chances are you can change the compensation of your peer, and that's why it becomes
has to go up.
And so, here's another quick note on that. I would never forget this, Dave. When I asked Brian about this, Brian Halligan, again, that conversation is so fresh in my mind. It was so fun, actually, just going through the whole journey around it.
For sure, picking his brain.
He said, I own 3 things, or every CEO should own 3 things. He said, I own the vision for the company, where it's going, and I have to constantly be the person repeating it every day, 10 times a day, to an investor, to our team, to our employees, to our partners, to our customers. I have to continue to say that. But otherwise, who will if he doesn't do that, right? And the second is the culture. If I can't get the right people on the team, no matter how great our product is, it's not going to happen. Obviously, HubSpot does great on that. And then the third thing he said is go-to-market. It's the unsexy part of my job. He said, nobody gives me credit for it, but that's what I do, is when every CEO needs to own it.
So I think that's brilliant. And I would say a lot of CEOs wouldn't own that. I had a conversation with the former CEO of GE, and he gave me 3 things, and that actually was not in his 3 things, which is kind of crazy. There were few CEOs, so I won't point out the one.
Yeah.
Here's an interesting thing, and you just said this. There is an emerging role in companies, and again, the challenge you have is you've got a CRO who could win, but the company doesn't win, right? So the CRO is like, look, I'm hitting I'm doing what I'm supposed to do, but the marketing team is not, or the customer success team is attriting, so it's not my fault. So the problem is if you give go to market to anybody below the CEO, you can have success in any division, yet the company still fails. So I think, I'm 100% on board. And we said this at this event last year. What's interesting is there's a new role called revenue leaders that are emerging, and revenue operations that are kind of emerging in companies that theoretically spans this. I can't count how many. You know this. Every CMO in the world is like, well, it's not my fault. Like I brought the MQLs, but they're not closing them. They're not calling on them. The BD team, I need to own the BD team because they're not calling my MQLs. My MQLs are so good. And then on the flip side, you have the sales leader who's like, no, these are junk leads. Like, it's not my fault. We missed our number, but it's marketing's fault. So this revenue, tell me your thoughts on this new title that's emerging and this RevOps concept that you talk about in your book.
Oh, absolutely. And in the book, that's why I wanted it to be more of an operating manual for people. So we created this after talking to probably hundreds, and this was 2019, right? Like now it's even more bigger and more valuable. This is 2019 when we wrote this, and we created this org chart of what a future might look like for RevOps. And it's really interesting that it's coming to fruition much faster than actually we predicted that at that time. And I've written in the book and elsewhere that it is the second most important role in the company, and that's a head of RevOps. Is the second most important. And I say second purely because CEO has to own that vision, host to drive that thing. Right. And the importance is because this is the person who can answer the most profane question in the history of companies, which is, hey, if I give you $1, what would you do? Where would you invest it? Well, if you ask to the marketing person, of course he or she is going to say, I'm going to invest in more marketing content or whatever. Salesperson will have their own answer. So is CS product. Everybody will have their own answer. But until this point, until the RevOps actually became a real role and the strategic nature of that role, that question couldn't be answered by anybody else. So CEO has to go to the CFO and they have to do Excel gimmick to figure something out. RevOps is actually going to be able to answer that question because RevOps stays in the center of it. They typically don't report to all these people. They typically should report to a COO or a CFO or a CEO, so they're independent. And finally, I think the best RevOps leader actually are able to tell the CEO and say, you know what? I think we should hire a sales enablement person. Oh, I think, you know what? We need to hire a head of employee relations because it's really nothing to do with numbers. It's like, the people are not doing the right way. So that conversation, you just have nobody until the RevOps actually came on the planet. So
here's what's interesting. Like anyone who works in a B2B or a B2C company knows this drill. You have a board meeting coming up in 2 weeks. And so it's like, what are the numbers? Like, what do we present the board? Whether you're public and you're like, we've got to present this to the street, or you're presenting this just to your board. This is such a maddening process where there's this debate of marketing says it's this, sales says it's this, finance says it's this, and this reconciliation process can take, I don't know that I ever saw it happen in less than a week to 2 weeks of time. And here's the problem. If my entire leadership team, or I'm on the leadership team, I'm a CMO, or I'm a marketing leader, or I'm a sales leader, and I'm like, okay, I have to stop selling. I have to stop marketing for the next 7 days or 14 days or whatever, because I've got to go figure out these numbers. Like that's what happens every quarter in every business in the world.
Yeah.
This actually solves this problem where there's one source of truth, which, and of course you ask a CRO, like, who should be in charge of the one source of truth? Well, the CRO should be. You ask a CMO and they're like, that CRO knows nothing. That person is a moron. Like it's the biggest cultural clash right before a board meeting. So you show up to a board meeting and you're like, I hope these numbers are right.
Yeah, and I'll tell you a quick story. The reason I'm so much in love with RevOps as a really important, again, like I've continued to talk about ABM, and I still think account-based marketing is so important, but still hasn't gone to the level of strategic job that should report directly into the CEO. The RevOps is that kind of job. And what's interesting, this happened in 2019, right before when we were writing the book. Mallory Lee, she joined our team. She became our head of RevOps. So we were very early in adopting this concept. And after 4 years of being a founder at Terminus, every meeting was exactly what you just described. It's like, going back into the time machine and experiencing it. And she came in about a month later. She said, every Tuesday we'll have this executive meeting. So picture this. We walk in that meeting. The first 10 minutes she shows up and she said, here's your go-to-market dashboard. That's what I put in the book. That's our actual go-to-market dashboard that was created in 2019. And she literally ran that and said, here's what's happening. And it wasn't, well, this is what marketing is doing. This is what sales is. No, she's not talking about that. She's talking about business terms. That was so cool. Here's our product usage looks like. And I feel like in the next quarter, if we don't get that up, I think I can see a problem there for us. Here's our pipeline looks like. We have a huge gap there in velocity. We need to figure something out. And then on this side, I think we need to launch new product. So she had the whole go-to-market dashboard that allowed her to talk about what a business should do. She will recommend a few things and she will walk away. In 15 minutes, she's done. And now this is what happened. And I was so fascinated by, which is why I love this. Every single person on the team, regardless of marketing, sales, CS, product, whatever, they all, for the first time, I saw in front of my eyes, become business leaders specialized in their field.
Yes.
And now we're solving business problems.
So, I mean, I wish I'd have had this conversation, 15 years ago, because again, it's such a debate of what the numbers are supposed to be. And as a CEO, you become a mediator versus, a visionary. You're like, okay, well, I've got to find the middle ground. So what's the correct metric then? If there's one metric that should indicate the success or failure of a go-to-market, what is that metric?
Yeah, it's by far NRR, net revenue retention. There is no other metric that I can think of that can change and help understand the health of the business, the ability. Well, most businesses, as you know, the reason they don't work is because they run out of money. Like it's not a bad product, or they literally run out of money. It sounds stupid to say that, but I've seen it happen. We just run out of money.
So let's talk about that though. If it's NRR, and you're saying then, well, what functions are then responsible or kind of belong in this go-to-market team or function? So
that's a great question.
I have an agenda because it's super important. Go ahead.
Yeah, no, I'm so glad you asked that, Dave. So glad. So initially, I thought it was, and this I'm saying everything just so everybody knows. I'm literally saying I did this. This is not a preaching where we're saying, oh, Kawhi, I don't understand why companies don't. No, I did that at Pardot, at Salesforce, at ET, at I did all this. So there you go. Like you're talking to the worst.
Look, we all literally, whether you're a salesperson, you're a marketer, you're a CEO, you're a founder on this live stream. We're all doing it. Like I guarantee, even when we know this, we're still doing this. So
still doing it, right? It happens like a deja vu. So initially, I thought, Dave, that only sales and marketing are typically your go-to-market teams, and that's how I grew up almost in the industry. So I'm like, that's what your go-to-market team, and we would rarely bring CS into the conversation. So the first and foremost, we have to say, no, your go-to-market team is a much more expanded team. It's not a sales and marketing team. We started calling our meetings go-to-market meetings. So that took away the pressure of sales, marketing, presentation, or anything like that. So it was sales, marketing, customer success, RevOps, and enablement with the CEO in it. So that was the go-to-market team: sales, marketing, customer success, RevOps, and sales enablement. That became and product started. That was too late in the game. As a matter of fact, I even skipped all over in the product on that one. But product was really, really important because some of the problems we thought sales can solve this. Why don't they do it? And then we had a product leader come into it like, oh, that's interesting. Why don't we create a lighter version of our product?
Yeah, I can solve this. This is an easy problem to solve. Whereas the sales leader's like, what do we do?
Yeah, right. So we are. Yeah. So if you don't have, I think everybody should recognize that we're not just trying to add more people to the meetings. The thing is, sometimes I've done this, and I'm sure you have seen this as well, is where we try to solve, we think it's a marketing problem or a sales problem or a CS problem or a product problem, but the reality, it's actually a go-to-market problem. So when everybody comes together and looks at that problem, you have no idea. Maybe we are looking at a sales problem and a product lighter version can solve the entire NRR issue, because now we've created a lighter version of the product that didn't even exist. They just invented in that meeting. Seen that happen too many times.
So it's literally the entire leadership team of the company, and they should meet as a leadership team to say, okay, here's a problem we just faced. Our deal count is gone down. Our deal size is too small. And so, again, I really love this. What you talked about a net NRR. So like parse that out. And in particular, I want to know, like, if I'm a marketer sitting on this, this event right now, they're going to like, why should I be responsible for net NRR? Like, that's not my job. And I can't count how many times I've had this debate with some marketer or some sales leader or some product person saying, look, I built the perfect product. Like, I've generated the best, MQLs. Everybody else sucks. It's not me. Why are you holding me accountable to other people's activity or effort? So like, what is net NRR, and how do you drive alignment in marketing all the way to, product and some programmer, some engineer on that responsibility?
Yeah, as an analyst firm now, and that's the reason we started Go-to-Market Partners, because we love this idea of trying to help companies do that. And I'm having similar conversations as you're saying. So first of all, let's define what NRR is, what it means, and what comes and how marketing, especially, but everybody should really think about this. And there are ways that you should impact that. So first of all, it's net revenue retention. What does net revenue retention mean? What it means that not only you can sell your product, which is your typically ARR, annual recurring revenue, not only you can have them renew your product, which is GRR, gross retention revenue, is now you can have, you can expand within the existing customer base. That is net revenue retention. It's really an expansion play. And here's why it's important for everybody to understand. And I'm going to just nerd out a little bit with everybody. And if people have pen and paper, just write this down, because this is going to be fun. If I gave everybody two companies, one is a $35 million company, one is a $50 million company. And this is a real conversation I had in a board for thing. Which company is more valuable? And again, in interest of time, I'll just walk through that real quick. Yeah. But 35 and 50 million, most people will say, well, if everything is same, for like their growth is same, the market is same, the deal size is same, the sales process is same, the timeline is same, then 50 million is a much better company. It has have much higher valuation. And then let's add one more variable to it, that the $35 million company has 120% NRR, and your $50 million company has 75% NRR. Now you might say, well, okay, 75, 120, not sure if it's that big of a deal. Well, here's the big deal. The $35 million company can double its revenue every 5 years without adding a single new customer. Let me say that again. A $35 million company can double its revenue with 120% NRR without adding a single new customer.
I got to pause you for a second. Yeah. I think this is the biggest gap in the entire business landscape. Like, for real, I can't count how many times everyone says, well, how many new logos did you guys acquire? How many, what's your, that one gap. Now you have a metric in the book. I looked it up. It's real. The cost to generate $1 of new revenue versus expanding basically your existing customer base is 5 times more costly. So not only is it more effective in that, that business that is expanding without, spending more cost, you're doing it dramatically cheaper, like crazy amount less expensive. Yet how many times have we given responsibility to marketing and sales to expand an existing customer base? So I get excited when you say this, so I cut you off. Keep going. I want like you're in a groove, like keep going.
And to me, Dave, I wish I would have known about this like 7 years ago. Like I would have done things so much more differently. And going back to your original question of like, why should marketer care about, or somebody else, sales care about because they're focused on new acquisition? Well, you absolutely should care about. That's how you lose job. if your company is not able to sustain an efficient growth, and if you haven't heard efficient growth as something your board and everybody has talked about, you're living under a rock, because every company is asking 2023 to be the most efficient growth. You don't have a truckload of VC money coming down. There's no Excel formula for recession. There's no such thing. The reality is you have to get, again, truly customer obsessed. But even that idea was like, yeah, of course I should talk to customers, but what? Now this is a real metric. NRR, if you can expand within your existing customer base, you take off the pressure of the net new logos in this kind of economic situation. It can change the business economics, and the fact that you can double every 5 years without adding a new customer, it is a game changer mindset. So I ask every executive team member, and therefore it might hopefully trickle down, that everybody got to have an NRR number and need to figure out how can they contribute to this number if they want to be part of that efficient growth model.
So there's two. You say something in the book where you talk about small is the new big.
Yeah.
And I love this idea, because so many times as an entrepreneur or as a sales leader, we make this mistake of like TAM versus there's a different approach. I'm going to have you share here, but like you can burn through as a marketer. I may say, look, my TAM is there are 6 million companies in the United States alone I can sell to. So I'm going to go buy that email list, and I'm going to start emailing 6 million people, or whatever. Or as a sales leader, I think this is even worse. The CEO comes and says, we got to show rule of 40. We got to show, let's say, a 40% growth year this year. Okay, great. I need this many more quota carriers, and I'm going to just cut my territory up now 8 more ways, and I'm just going to assign quota and expand our TAM by just hiring quota carriers. Like, right. I think it's an absolute disaster strategy. So what's the right strategy? I mean, I'm telling you, it is a disaster. I've done it. Yeah. It's a disaster strategy. And every CEO does it. So like, what's the right way to do this?
Well, let me make it even worse, because I've done the worst than you. If you have a competition, I think I'm going to win the worst competition.
Pretty sure no, but let's go. Let's bring it.
So I remember this when we were building Terminus early days, and we were raising money. We would go with the TAM, raising money. The TAM idea, the total addressable market idea, is for raising money, is to see if there is big enough market. If eventually we get to this, it's a real way to look at if the market is big enough. So there is a credit to that. But if you build a business plan for that, that's where you fall off. You try to bite off way more than you ever can and achieve. And I actually posted something about this yesterday. I'll go again HubSpot because it's such an easy example for everybody to understand. Dharmesh Shah, one of the co-founders of HubSpot, posted this, I think yesterday or 2 days ago. He said, and it supports the TRM, the idea of going after total relevant market, which we'll define in a second, is that he said, look, HubSpot is $1 billion business right now, but and they have over 150,000 customers today, and they're still less than 10% of the market. And so just think about that. HubSpot, 150,000 customers, $1 billion in revenue, IPO, everything, and they're still less than 10% of the market. What's the point here? The point is that the TAM is big, so there's opportunity for them to grow. But if they only focus on TAM, they would have never gone. They focused on TRM, which is total relevant market. So what does that mean? They started focusing on SMB first. They said, I'm going to go after SMB. Within that, what else did they do? They started to say that, you know what, the best way to create this faster movement is have an agency partnership. They created a whole agency program to drive their outcome in business. Instead of hiring 100 salespeople, they supported 100 agencies that became their salespeople. So they created a go-to-market motion widely different than any other SaaS company at this of our time of driving their business forward. So total relevant market is an idea to say, you know what, most companies don't need to sell to 1,000 different companies every year. You don't. You probably need to sell to 100 companies to hit your numbers. And if
again, I'm going to just share some mistakes that I've made, and I just see every CEO, every marketer, every sales leader like makes the same mistake. And it's this: when I miss my number, the problem is I always want to say I need a bigger market. We need to go into Europe. Or, we've got to go up market because our market's just not big enough down in the small business space. So I'm a sales leader, I'm a marketer, I'm a customer success person, I'm even a product guy. Hey, we've got to go we got to go way bigger. I mean, a friend of mine is a sales leader. I won't say where, but his CEO and his CRO. So he runs marketing, and it is a over $100 billion company. I'll leave it at that. Yeah. And his sales leader came to him and said, we've got to expand our market size. And he's like, no, actually, there's plenty of market here. Yeah. We have a product issue, and we have this issue, and we have that issue. So how do you help people solve this problem?
Again, very good question. Now, it's a very good question, Dave. So I'll give you an example of a customer that we're helping right now. They're in the same marketplace as 3 other companies, and they all feel the same exact thing. Hey, we are being in this $10 to $20 million range, and we have not seen growth for the last 3 years or 4 years. We're just taking one customer, your customer churns, and they come to us, and we're just borrowing from each other. We're in the same cesspool almost, it feels like. And we work with them on something that I wish every company would do it. So it's like free advice for everybody. So where are your top customers? What industry are they in? And they said, well, I think, we probably said, I don't know. They went back, did the research. Nobody does this. This is crazy. Go do it. Go look at it. Yep. If you have $10 million in revenue, you better go and spend a lot of time understanding and parsing your customers. So they went back and looked at and said, oh, seems like we do really well. Our biggest deals, our biggest opportunities seems to be in the field of security, which is not something that particular industry really even focuses on. They are going in the MarTech space where everybody is. In the security, they have no idea. This is like a big deal for them, and they're able to do much bigger deal sizes for them. So we started working with them. All right, let's just focus on security. And they doubled in the last 6 months in that particular vertical, doubled. So all because they focused at that TRM.
So the key is go small and win it. So in my past, we did something similar where, accidentally we came into the gaming industry, which is a small market. That is not how many casinos are there? There's not that many. But it turned into one of our largest markets because we just became so good at it. And if what we do is we combine this concept of small is the new big, like hyper focus and be the best at your one thing. It's this hedgehog concept that is kind of an old adage. And you combine that with your net NRR concept where it's like, look, let's expand. Let's be great in this segment. If it's security, like let's be the best versus trying to be, everyone wants to be a platform. They go platform before they should. So what are these stages people should be thinking about?
Oh, I love this because this is again a fallacy that we went through. So in the book, we talked about these 3 stages: problem market fit, product market fit, and platform market fit. I love framework. So if something, it has to either rhyme or start with the same letter.
I think that way too. So just bring it on. Keep it coming.
Right? And in our research day, what we found was you could be a $20 million company and still be in problem market fit, meaning you haven't figured out the right TRM yet. So every single deal is kind of nuanced and different, and you're adding engineering or adding cost to support it. You haven't figured out this repeat model yet. So we have seen companies that are 20 million and still in problem market fit, but that's where you're figuring things out. Product market fit is like the example of this company that we're able to go in security and say, oh, we're going to own this. We're going to have an 80% market share in the security industry. Great. That's now you have a product market fit in one industry, but that's not enough for you to continue to grow. So you continue to do that, but start dabbling into what else. And a platform market fit is where you say, you know what, we do this. Now let's add one more product to it and see if we can expand, which is your literal case study to get NRR. Your net revenue retention is coming from when you become a platform. But here's the fun part, and I'm sure you've seen that before. We're advising companies that just got in maybe 5 million in revenue, and they're like, oh, we're a platform. I'm like, no, you're a feature. And they get so offended by that because I'm like, I understand as a founder and a product guy, you're going to feel offended about this thing. But here's the thing. You are not a platform. A platform means that to define it where you have more than one products that have more than one hooks so that you can expand it. Does your customer buy more than one product from you? No, they buy one product. So you're a feature, maybe a product company at most, but there's no way you're a platform company.
Right. So is that a problem? Like if I'm a feature, like, cause I think it kind of offends me. Like, oh, hey, you're still just a feature. I'm like, no, I'm not.
Yeah.
I'm a platform. Is that a problem for companies? Like,
No, I think so. So let's say an example of Superhuman. Superhuman, an email system that got popularized in the last. I actually use one of them, but I pay $30 a month. It helps me organize my emails, and I'm not buying anything else ever from them. They probably are a great product company. Their retention is over 100% or so, over 90% or something. I don't know how high it was last I checked. So they're doing really well. It's okay, but at some point, companies, people are going to churn. And at that time, you're going to have the only lever you have is to say, well, don't leave us, or I'll give you a price discount on keeping you something, or there's going to be another product who's going to steal it from you. The way to get your hooks in that company is NRR. So you think about why is it hard to rip and replace Salesforce or HubSpot? Well, it's not because they're the most robust and the best products in the world. Like I was at Salesforce and I'm like, man, this sucks sometimes, right? And there are people who would say that too. But
I can't believe you said that. Yeah, but it does at times.
Yeah, it does at times. And at the same time, they have the right ecosystem. It's integrated with every single technology. Now, if I have to replace that and do it, that's a 6-month effort that's going to be out of my business. So they have created these hooks that allows you to continue to keep buying from them, but also buy all these integrations, which again goes back to the NRR, which is the holy grail of every business if they want to create efficient growth.
So, okay, we've talked a lot about kind of general go-to-market strategies. And again, just a pitch, like, you can't, it's so hard to see this from the inside. So often you can't see the forest through the trees. Like it's a real problem because you get so stuck in your mindset. So an organization like yours, I mean, you created a new organization called GDM Partners to have a consulting firm to come from the outside and say, you guys, you're missing it. Like you guys are, it's so obvious. Let's pivot just a little bit. What are the right kind of technologies that facilitate? This is the RevTech Summit. We have thousands of people in attendance here. So what are the right kinds of technologies that will facilitate this? And what are the wrong kinds of technologies? And like, what's the timing for this? I know I just threw 3 questions at you.
Well, what's interesting about this is I remember thinking through the biggest iterations of our business that has happened in the last 3 decades. You think about the email flow, like, everybody who's, old enough and have seen things, they know that email was a big deal. It was a big deal when it came out. They used to get, I remember, 80-90% open rate on emails. Like
it changed everything, right?
Everything, right? Yeah. And then a few years later, HubSpot and all these companies came out, Inbound came about, and said, okay, you know what? Inbound is a better way. Now that you can do emails, now you can capture leads and you can nurture them, and all of that started to build. And that led to marketing automation. And marketing automation, again, changed the world. And I got to be part of all of those, the Pardot Salesforce ecosystem. And then a few years later, ABM came along. It's like, well, it's not just about leads. Leads is not enough. We need to focus on the right accounts because we don't want volume. We want quality. And really ABM became. And now we're talking about go-to-market here, which I believe is the next big iteration in the marketplace, or evolution of it. What's interesting about all of it, when I think about revenue technologies, when I think about revenue operations, when I think about revenue intelligence around all of it, is the missing part of all of this was that every one of them had their own little analytics with it. Everyone, marketing automation had little analytics. Inbound has their own analytics. Every single technology that we looked and used has little analytics. Terminus, we have a little analytics thing going on. But it was very much embedded into that ecosystem. It was about just that product. And what RevTech and revenue technology is supposed to, the promise for the world with that is that it's going to normalize it. It's going to make sure that you can see it without knowing every little detail of every single product that you have. So the companies who can really abstract out and give a strategic view into what's happening in the business and talk in business terms like Mallory did for us in that first go-to-market meeting, it's going to be a game changer. I think a lot of technologists today are still just maybe a layer abstract from it, but they need to do a really good job to really become a business technology tool, not just another BI tool. Like really leverage up and say, no, this is not just a pretty face on it. This has the value. This is going to help you make business decisions. And I'm still waiting for those technologies to come out.
So that's kind of one of my. I mean, we only have another 5-10 minutes. So like, look around the corner a little bit. I mean, what do you see? Like, what are the important things that can inform marketers or inform people, these revenue teams to be successful? Like, what are the kinds of, let's not worry about the tech, but what are the solutions people need to be thinking about?
Oh, that's great. That's a great, like, so technology is hard because that's the part that we talked about. Around the corner, we are looking at we Open Price is one of our customers. I'll give them as an example. And we're looking at them and saying, oh, whoa, they are starting to do and figure out, well, we can actually show value of our products, of the entire business within 15 minutes. Within 15 minutes, you can launch, deploy, and start doing some changes that will allow you to see what's happening. And that's time to value.
Yeah, speed to value. That's what I was going to say. Speed to value, man, that is such an important thing.
Yeah, like we just did an ROI study with Sendoso, where 93% of their customers say that within 3 months they see value of it. Wait a minute. Like, so when you add the customer time to value, I think that is a game changer. And I think most technologies are still they're trying to speed up. Some of them are still starting to speed up to deploy. But what they really need to focus on is, what is my time to value? If I can get value in the first 30, 60 days in 2023, your product is already on the chopping block for the next quarter.
Okay, so you just said a swear word for me, which is like deploy. How much of, whether you're selling technology, you're selling like whatever, some service, I think this concept of like, hey, it's installed, it's deployed, it's delivered, like that's useless. In fact, that's a false positive. And I'm telling you, that causes so much misalignment and so many problems. So explain this concept of like value versus deliver.
Oh, big time. So that's why when we were talking about the dashboard that we have in the book, it talks about usage. It never talks about number of installs. Like it has no meaning whatsoever what installs does. Like, okay, why? Okay, we have it's like number of subscriptions. Okay, so big deal. How many people are reading, right? Like that's what you would really look at. The same thing is with this idea of customer time to value. Within first 30 days, have they just integrated stuff, or actually you've created a page and we have a process and they're deployed and they've launched a campaign? So at Terminus, we used to measure it very differently. We said in the first 30 days, they should be able to not only launch a campaign, but measure an ROI of a particular campaign by a certain set of metrics. If they do that, we now know that there is a milestone that we cross. So we created milestones for our customers. And I would ask everybody to think about not customer acquisition, but customer milestones to create that time to value.
Okay, so if everybody listening live and who watch this after the fact, think like write this down, go post about this on LinkedIn or whatever. Milestones are everything, and it's value, milestones that deliver value. Because here's the thing, you can sell anything at any price as long as it's less than the value you're delivering to the customer. So if the customer is like, look, once we bought this solution, this widget, we just generated $100K of EBITDA. Guess what you can charge? You can charge $999 for that $100,000 of EBITDA. So like, if you put your milestones around this metric of like customer value of actually, and it's not what you think their value is, it's what they think their value is, right?
Yeah. And the metric, if you really want to think about it, is time. It's time to value. Like if your value is going to come in the end of the year, that's too late. That is already far away. Just like renewals. When people start, well, we have a renewal problem. Well, when did you start working on it? Well, the deal, the renewal was next month. So we started 30 days ago. That's too late.
Yeah.
That is too late. Renewal process starts 6 months ago. 6 months before, you should have a spreadsheet of all the companies that needs to be renewed. And now you need to start having conversations. So the time to value as soon as you sell, and time to value way before renewal is a big idea that most companies are not even thinking about.
So, okay. So we've got, thousands of marketers, salespeople, execs, product people on, watching this again, both live and afterwards in the recordings. Like, give them 3 key takeaways, like actionable one. And I'm going to give you one of them.
Yeah. Go for it.
I guess I have a few rights in this.
Yeah.
So if you're a salesperson and you're pitching, you should be pitching value. If you're a marketer and you're writing an email, it's like, what is the value you actually provide to your customer? If you're a customer success person or you're a support person, you should be thinking, okay, how do I get them to where they're generating their value? And the key here is ask your customer, ask them, what's value to you? If you just don't, if you presuppose what their value is, you're probably wrong. So I'll give you 3 more. That's one. We'll call it 4 today. So what are 3 more key takeaways people can get from your session, and then we'll wrap up.
All right. So I just made a note on that. One is we talked about this idea of TRM, total relevant market, and again, most companies don't need to sell 1,000 in a year. Like that, you're not a widget for the most part. So probably 100, maybe if you really look into it, maybe 50. And so if you really pull that down, the effort that you really need on that is very different. You need to think about every deal not like a sparkling water or a champagne. You have to decide what kind of experience you're going to do. It's a champagne. If it's only those 50, do a champagne experience for them. That may add too many different things. Don't give everybody a sparkling water if that's not the deal, right? So the phrase that I've used for that is saying becoming or being intentional is way more important than being brilliant. Everyone
I love that.
Doing that is trying to be brilliant. Is that there's no need to be brilliant. What we all need to do in 2023 with efficient growth as our mantra is be intentional.
Okay, I love it. Okay, number 1, be intentional. Think small, not big. High impact, not scale. Don't scale. If you need 50, just do 50 and be amazing at it. Okay, that's number 1. I love it.
The second one is NRR. We talked about that, the net revenue retention. If your metric does not align, or if your programs don't align with that, you are at a risk of a job loss. Like I'm going to straight up tell to people, like, this is what, if you want to secure your job, if you want to find a way to make your business profitable and efficient, make sure that you have something you're doing to drive NRR, because that is one area that everybody needs to get comfortable with. That's the number 1 metric for every company. And finally, like this is something that I've been saying now more than ever before, is I don't know how about you feel about this, Dave, but I have never lost a 6-figure deal when I've met the team and met everyone in person. It just 100%. Doesn't happen. It's time to get out. There's no Excel formula for a recession. There's no Excel formula for trying to close these deals. Like we need to get out of our Zoom boxes and do. So that's why we're doing go-to-market roadshows. We're actually meeting people, and people are craving for that. And they don't need 10,000 people. You can do that for 10 people, with 15 people, with 50 people. Get out. It's time to get out of your home.
Well, and look, at the end of the day, I've always said this: people buy from people. They don't buy from webinars. I hate to say it. They don't buy from Zoom calls. They buy from people, and they make a human connection. And when you're in person, nothing beats that. Okay. Truly, what an amazing session today. Thank you. Super generous with your time. How can people, if they have questions, 2 things. If they just have questions, how do they reach out to you? And if they want some help, I know your firm, like we've done evaluations. You can come and do an initial analysis. How do they reach out just to ask questions? And how could they potentially engage GTM partners?
Yeah, like you can just go to gtmpartners.com and set up a strategy call. We're doing a strategy call for companies. So we just want to help as many companies as possible to at least have a free assessment, understand where the problems are, and at least point them in the right direction, even if they can't afford us or can't do us, because there's just too many companies and the problem is too big that we don't want to, we want to help as many companies as possible.
You don't need 1,000 clients, right?
Yeah, I don't need 1,000 clients. So we want to help thousands.
You've done that. Actually, for Signals, the company hosting this, I sit on their board. You actually did an initial assessment, and so this is a thing you do. Okay.
Yeah.
So just go to the website. What if they just have questions? How can they reach out to you? Are you a LinkedIn person? Are you a Facebook?
Yeah. Drop me on LinkedIn. Easy to find at Sangram Vajre. I try to post something every day on it around go-to-market, sometimes about life, but mostly about go-to-market. So that's the best way to connect with me. And as a matter of fact, this was such a great conversation. If you tell me or DM me on LinkedIn and say, well, here's what I learned from today, like the first 10 people to do that, I'll ship you a copy of the Move book.
Okay, wait a sec. I got to go do it. Give me 1 second. I got to go do it. No, go look. The book is super fairly priced. Go if you're not in the first 10, which again, we have people rushing right now to DM you, but go buy it on Amazon. He's not promoting it. He didn't ask me to promote it. I read a lot. I read a lot of books. A lot. This is one of the best business books I think I've ever read. And I say that with sincerity and all authenticity. So thank you again. Enjoy the rest of the event. This is going to be a content-packed event. reach out to Sangram. Thank you all, and let's get aligned. Let's think about GTM.
Let's do it. All right, Dave. Thank you. Thanks, everybody.
Thanks, everybody.
Hi guys, I'm Nicole and I am over all of our event planning and marketing here at Signals. Thank you so much to Sangram and Dave for that amazing keynote presentation. They had amazing content covering the importance of using your GTM strategies, and it was incredible to learn from the man who literally wrote the book. If you want to learn more about upping your GTM strategy, we invite you to add Sangram's book, Move the 4-Question Go-to-Market Framework, to your reading list. Starting now, we have breakout sessions that just opened up on RevTechSummit.com. If you're on the live stream on YouTube or LinkedIn, we invite you to check out those those breakout sessions. We have sessions from Mariah West. She's the VP of Marketing at our sponsor, VIB. Additionally, we have Avishai Sharon, the founder and CEO of Trend Demon. There's a presentation from Will Allred, the founder and COO of Lavender, with Dorothy, their director of growth. Additionally, we have a presentation from the Dream Team over at User Gems. We have Isaac Ware, Braxton, and Justine. And finally, we have a presentation from Julianne Market, the CMO of Above the Fold. They are an awesome marketing firm, and she has a ton of great strategy that she covers for using targeted ads. Up next, we are hearing from David Delaney, the founder and CEO of our sponsor, Tenbound. He's going to be sharing his insights on leveraging the dark funnel and applying marketing automation to access your unseen interest. David is the founder and CEO of Tenbound. They are a research and advisory firm focused on B2B sales, pipeline, and revenue. They are leaders in cutting-edge SaaS research, and they host a number of events and webinars that bring together all levels of management to learn and network. They have a huge focus on sales development. Additionally, they provide advisory services to help companies with sales development. David is a sales mastermind, and he's spent years perfecting his techniques at companies like Infer, OpenDNS, and Glassdoor. Make sure to check out Tenbound's events. They are amazing, and we love attending them every year. David is going to be joining us shortly. Thank you so much.
Wow. Thank you, Nicole. That was an outstanding introduction. I was like, who is this guy she's talking about? I appreciate it. And I'm excited to dive in. We have been hearing about the dark funnel for a long time, and it's a relatively new concept, and people are trying to get their heads around, what is it? How do we use it? And what's the difference it's going to make in our pipeline this year? And the tricky part about the dark funnel is tracking and measuring ROI. And it's, to cut to the chase, the dark funnel has a lot to do with brand, which is sort of a dirty word here in 2023. And, not something that a lot of people are talking about. And so hopefully, this presentation will give you some new ideas and new ways to think about where your potential customers are. And so, oh, great. Okay. Wow. How did that happen? Thank you to whoever did that. So we're going to talk about the dark funnel, what it is, if you're not super familiar with it, and how you could potentially use it this year to achieve your goals from a pipeline perspective. And it's really about aligning with the way people buy these days. I won't take you down memory lane, but the buying process has changed dramatically over the last 10 or 15 years. And a lot of companies are still following the go-to-market process that's aligned with just a behavior that just doesn't exist anymore. And we want to make sure that we're staying ahead of the game, especially from a revenue operations perspective, because you come to it from a a way that you can actually impact and engage with this dark funnel and really make a huge difference for the company. So just a bit about Tenbound and where I'm coming from. We've been really focused on the pipeline and revenue generation aspect of go-to-market for the last 7 years. And we provide insights and intelligence on how to do that in a very practical way. So initially working, on the sales development side of pipeline development, but now moving to, thank you, whoever changed that. They always put an E in my name. It's totally fine. But now we're really focusing on what does it take to grow predictable pipeline and revenue in the go-to-market aspects of mainly software companies. And you could look at it from the big three that we see out there. There's the people aspect, there's the process aspect, and there's the sales technology aspect. And you can have two of the three and be in really good shape, or you can have one of the three and be struggling, or even all three. But there's always room for improvement in all those different aspects. And so we provide those content, events, and insights into how to really be able to achieve that. And we built up a community over the last few years of people who are passionate about pipeline and revenue, and we're super excited about it. And as Nicole mentioned, we have a conference coming up that's focused on pipeline and revenue generation from a leadership perspective on March 22nd. So I hope everybody can make it there. We've got some great content coming up for that one. So when I look at the dark funnel, I try to think about it that the way that we buy has changed completely over the last few years. And you see a lot of companies out there following the same go-to-market trajectory that we've been using for a long time, and it's getting diminishing results. And especially now in the for me, it looks like a recession, but it's if it's not a recession, it's a very hard time for the tech industry. And you can see that especially with the SDRs and the AEs, they're kind of the first to go when people start to have issues. And if you kind of double click into it, it's a lot of companies are going to market with the same metrics, the same patterns as they've been using from 20 years ago, and things have changed dramatically. So when we think about the dark funnel, there's this universe of people out there that are trying to solve problems, and there's no limit on the number of business problems that people are trying to solve. And I bet if you get off this webinar, you've got 10 different things that you're trying to solve. And in that process, they're seeking information and intelligence on how to best solve those problems. And so, as you know, probably as we get off of this, we're going to start reaching out and Googling and looking for information about how to solve our problems. And they seek information in a completely different way. And so the main thing when you think about it is, one, there's a different pattern for different levels of the organization, obviously. So I'm going to simplify this as much as possible. But a decision maker at an organization has a different pattern of seeking information and finding information than an influencer on the deal or an end user, obviously. And so this is going to change for your vertical or for the different market that you're going after, but they each have different ways that they're going about trying to find information. And so in the past, when I first started, it was a long time ago, sellers held a lot of the information. So in other words, you were kind of misinformed, or you just didn't have a lot of information about what was out there in the marketplace. And you really needed to go through sellers for especially more complex solutions in order to get information. And the knowledge that you kept and through the years, and as you became more sophisticated in this, was it locked up in your head. And then at 65, you retired, and hopefully you passed down some of this information to the next salesperson that came in, or the next marketer that came in. But a lot of it was very unstructured, and it's the same on the way that you research information for making buyer decisions. So now it's completely turned, and I'm sure that nobody on the call, hasn't heard the Gartner and the Forrester research on the fact that buyers have all the information now. They've got too much information, and they are overloaded actually with information, and they're making 80% or whatever it is of the decision making without even involving a salesperson. And really, if you've taken a demo in the last couple of years, you realize within the first couple minutes, if the seller's not adding value, understanding your business, and really bridging the gap between the problem that you have and what you're trying to accomplish, they're not adding value. There's actually been a rise in platforms that just run demos automatically. AI generated demos, because at that point the salesperson is adding so little value that they can just be eliminated. So the seller has to add value in order to be able to have a reason to be on the call at this point. And then the other thing that's really important is that the tribal knowledge is now captured, shared. You can understand what's working and what's not on sales calls. The information from the buyer side is being captured in their wiki and the different ways of capturing how they do things. And so now we have even more information about how the whole process starts. And it's a unique opportunity for RevOps, for the people that are on this call, because, and this is a graphic from Dynamico. I've got the link there. But RevOps sits in the middle of the process between the seller and the buyer. And they have a big influence. You have a big influence on how you connect the information and how you align with the buyer journey in content and campaigns, tech integration, the CRM, sales enablement. You're really in the center of this transformation that's happening. And if you think about how you buy today, and then you think about the marketing process that you have in place, sometimes it's a lot different. And you've got one marketing campaign going for the standard trackable metrics that are happening, and so you're tracking those conversion rates and you're understanding what's working and what's not. But then at the same time, you go and you do something completely different in your own buying process, and it's not necessarily aligned with the way that you go to market. So if you think about it, and this is a very simplified, version of the dark funnel, but you'll go talk to your friends, at your kid's basketball game. You turn over, that guy's in tech, or she's, works for one of the big vendors. What do you recommend, as far as trying to solve this issue that I have? Then you'll go to a community, and maybe ask a question like, what are the top 3 that you see out there? You'll start to read industry related content, not necessarily the content put out by the vendors, but just third-party resources. You'll go to review sites and start reading reviews and trying to whittle it down. You go to the events that are in your industry and start talking to people. And you may even have, subterfuge conversations happening in WhatsApp or on Slack, asking, particular individuals who are experts, what do they recommend? So that's what you're doing in order to start looking at this. And then it's not even until you start to enter the orbit of the company that you start to become, trackable. So then you start downloading research papers, gated content, giving them your email address, reading the website, shortlisting vendors, and then finally at the end of this process, at the 80%, you're willing to take a demo and talk to somebody. So, and by the way, if somebody's on like a live stream and you've got questions, or I just don't want this to be like a whole just me talking. If you've got questions or anything, just pop them in the chat, and I'd love to make this more interactive. Okay, so you can track a lot of this right now. So obviously, like I said, first you go to Google, or now it's maybe Bing, so you can, or Chat GPT or whatever it is, but you can start to do direct searches. You can start to see where they're coming in from, organic searches. There's all the paid mechanisms, display ads, paying SDRs, either your own in-house SDRs or outsourcing your SDRs. And you can start to track in some way, shape, or form how people are finding out about you and how they're coming in. But when we're talking about the dark funnel, that's now it could be less than 50% of the activity. There's also new technologies that are coming out to be able to help you to track it better, which includes intent data. If you're not familiar with how intent data works, you've got to get with the times here, because it's absolutely critical. Since we do everything online, there's certain behaviors and initiations that are happening online that can actually be tracked. So the review sites can connect you with people that are potentially interested. There's a whole universe of companies that are account based, and they can tag the person from specific accounts and let you know when they start to bubble up. And there's online publishers who just own a ton of online publications and can actually let you know when people are reading up on your particular subject matter. So there are ways to get in front of this. And there's also ways, if you're in a process where you know them, where you can get engagement readouts on your email, or have them do particular scorecards, and really give you a lot of rich information, get their email address, and understand if they're more interested in what you're solving. And I'll give you a few examples of this. Obviously, we're talking to Signals today. Signals I'm a customer of Signals. I'm in there every day. Their chat bot is on my website, and they're directly tied to my CRM. And so when there's somebody from one of those companies that self-identify, they start downloading research or looking at papers and becoming more and more interested, especially if I've got an active deal cycle. Boom, I know that there's intent there. And that's, so critical to being able to understand, what they're doing out there, even if it's not directly tied to the individual. Email, like I mentioned, email engagement. So if you're not using something like this, there's a lot of different solutions out there, but I can tell when someone's opening the email, downloading a paper, how many times they've looked at it, and things like that. So even if they're still in the dark funnel and don't know if they're actually interested or whatever, at least I can see some of the behavior based on what they're most interested in. And then I mentioned scorecards. So one of the best ways that I can find out if someone's interested in pipeline generation, they're interested in sales development, and they want to potentially look at some of our paid products, they start doing a scorecard, and I get all this rich information and understanding of how far along they are in the process. And then it's a very easy way to reach out and see if they'd be interested in having a conversation. So those are just a few of the examples that are very trackable. The difficult part with the dark funnel is we don't have a lot of ability, and I'm essentially like a sales tech analyst at this point, and so I haven't heard of a lot of companies being able to crack this code yet. And so I'll give you some manual ways to be able to track and potentially activate the dark funnel, because all of those examples that I gave at the beginning of word of mouth and joining communities and reading industry related content and going to events and being a raving fan of your product, there's sort of a divider in between there where it's very hard to get that into the CRM and then be able to demonstrate ROI. And that's where it comes down to the importance of brand and why it's important to address this, even if you can't directly tie an ROI to every activity that you're doing, like with the other ones. So if you think about, okay, I know that all these conversations are out there happening, but how can I actually influence those? So think about this for your particular industry. So there's niche communities for everything that's out there. You're probably in about 10 different ones. Some are more active than others, but there's all these niche communities that are popping up that are very, very focused. So, if you're not in the tech industry, if you're selling like spark plugs or something like that, there's probably a niche community out there that's trying to solve those particular problems in your industry. There's probably an industry newsletter that's used by most of the top players to get the insights and the intelligence that they need to be able to do their job better. There's brand collaborations where that this brand is way ahead of you. They might be in a slightly different vertical market, but you could potentially work with them to do some content or run a different activity. There's all the review sites that you're not that you might not be particular. There's review sites for general software use, and then there's review sites for every single niche that's out there that you could potentially integrate. There's events that you could potentially sponsor, get a booth, and get a speaking spot to ensure that the attendees know that you're one of the key players and that you have thought leadership in this area, and you're available to demonstrate how you're different than the other solutions that are out there. And then there's content collaborations where you could potentially work with influencers within your industry to make sure that they know that you exist, that you're on the radar screen, and you're one of the top 3 potential solutions for people that are looking for ways to solve that particular problem. So there's a lot of different ways. I'll give you 3 quick takeaways that you can use from this. Without going into too much detail, I'll put my email address if you want to talk about this more. But number 1, enlist your sales team or your SDR team as a research team. And even, some people are, as the traditional metrics have declined, they've sort of repositioned their SDR team to really become a research team to try to bridge this gap. So require some questions on the demo. And I know that salespeople aren't super excited about having requirements, but this is super, super important because of how hard it is to bridge the gap here. So just require a few questions. It could be, ask the sales rep to describe the buyer journey for the person that they're talking to. It's the classic question. How did you find out about us? Were you referred? What's your information gathering process in looking at different solutions like this? And tie that back to the opportunity in your CRM so that you can run reporting on it. And you can start to see patterns in where the person is engaging with you in the dark funnel. The next one is you have to create a strategy to stand out. And we gather up a market map that's just particular to the pipeline and revenue generation. There's another market map for sales technology. There's another market map for MarTech. It seems like every VC firm is coming out with these incredible market maps. And what's really important here is that you have to be able to stand out and have a unique value proposition. And you have to be able to communicate that in order to even break into the top 3 that your customers will initially put you in to be able to evaluate the solution. So what is going to be your standout, breakout, unique value proposition that you put into the various parts of the dark funnel? The last quick takeaway is creating your tribe of raving fans. So this is so important that there has to be people in the dark funnel right now who absolutely love you. They love what you do, and they're willing to, co-create content. They're willing to go on webinars. They're willing to talk about the amazing experience because you've enabled them to do that. So you really have to identify your raving fans, track them within your CRM, and stay close, bring them into the family so that they are the center of your demand creation, your conversion, and your fulfillment of their demand, the hero's journey or the journey of the customer. And I'll give you one quick example here in the last 30 seconds is Tenbound. Tenbound is a perfect example of operating within the dark funnel and being able to use that in a way that's authentic for our community, but also lucrative for our customers. And so we've gathered this highly engaged community of 40,000 members who are passionate about pipeline and revenue generation. We put out constantly high quality content, research reports, etc. And then we offer sponsorship opportunities to sales technology vendors to be able to engage with our audience. There's no pitching, there's no sales pitch. It's just the engagement, getting the brand in front of this audience, and then bringing them into the funnel when they're ready to solve that particular issue. And so if they don't know you, they can't flow you, okay? So your brand is unknown. It's a sea of all these other solutions. You have to be able to engage the community. And that's what we do here at Tenbound with our sales tech partners. So any questions? What are your thoughts? I mean, I would love to hear, how you've utilized the dark funnel and the success that you're having, or tools and technologies that I've missed, so that we don't have to continuously track this manually. Hit me up in the comments or DM me directly on my contact information on the screen. And I want to thank Signals for giving me this opportunity to take a bunch of stuff that's in my head and hopefully make something valuable for you to use. Thank you.
Thank you so much, David, for those great insights into applying the dark funnel. Make sure to check out Tenbound's events. They are amazing, and we love attending them every year. They have some great research that is being done by them as well, and it's super insightful for current trends in marketing and sales. We're excited to hear next from Steve Ehrer, our Director of Sales here at Signals. Steve is a sales master. He has helped Signals grow exponentially since beginning his tenure with Signals, and we love having him on our team. Previously to Signals, Steve worked with companies like Forethought, Zant, and Ivanti. Steve is one of the most outgoing people I know, and he enjoys jumping out of planes for fun. Thanks for joining us, Steve. He is going to be joined by Sterling Crump, our Director of Customer Success. I'm going to pass it over to Steve and Sterling right now.
Thank you. Appreciate it. I've never been called a sales master before. I feel like I should have a belt, like a special like black belt.
Purple.
Yeah. And be up in the mountains somewhere. So yeah. Let's see here. All right. So sharing, there we go. Great. So we want to talk a little, that's right, Derek, master of disaster. Want to talk a little bit about signal marketing, what it is, why it's important, and how we can take a look at that. So there's two traditional approaches, Sterling, to generating revenue. One has been the demand gen motion, which is it's very much you've got your lists of accounts, you've got your contacts, you got your website visitors. You throw that in the funnel, and what you hope comes out in the bottom end is revenue. And it's a way I've done it at other companies, and it's worked well. The other way that I've worked is through targeted accounts. You have a look at exactly what kind of companies you want to go after, what accounts you want to go after, and you target them. I'm reminded, though, in the summer at our ABE Summit, we had John Miller on from Demand Base, and he said a couple of things. He said, demand gen is like fishing with a net. It can be very, very effective. The problem is you can only get so big, and you don't have any control over what you bring in. So you might be bringing in the tuna that you're looking for, but you also might bring in a shoe. And then he said the problem with targeted accounts is it's like fishing with a spear. You know exactly what you're getting. You know exactly what you're going after, but no one, I don't know about you, no one likes getting poked with a spear.
Yeah.
So I want to take a step back and look at what does revenue even mean? What is revenue? Well, it's not money. We all think it's money, and it's not money. Revenue actually comes, and I speak French and Haitian Creole. And so when I see the word revenue, in my mind, I want to say revenu. It actually comes from the French word revenir, which means to come back. Going down the nerd funnel, it was 15th century. The French kings were sending out tax collectors to go bring back money so they could control it. That's where the term comes from.
That's cool. I didn't know that.
I know. You learn something every day, hopefully. So we've taken that to mean revenue, to mean the money that we bring in. The fact is, this is what a revenue cycle should look like, as I've outlined it here. I'm going to go through each of these and define it so that we can see what does this revenue cycle look like. And the first thing is obviously identifying the addressable market. Number two, marketing messaging, getting that out. Number three would be letting the audience listen. Signal data, engagement, and then realized revenue. And there's a couple other nuanced steps in there that we'll get to there in a second. So with the addressable market, if you haven't heard our keynote, you came in late, make sure you go back and listen to it. Sangram and Dave dove into this really well. In fact, Sangram's book Move, I think I saw in the note in the comments that some people have ordered it already. If you haven't, do it. I'm just about done with it.
And it's at a great price point too, which makes it nice and easy. It
there
really
you go.
is.
Yep. It's actually on. I have about an hour commute into work, and it's about it was like $4 on Audible. So great commuting book. I just find myself wanting to take notes. But he talks about the addressable market, and I took some of this from him, so I hope he's okay with this. But it's answering these questions, like what problem do you solve? What's your positioning? Who is your buyer? Who's the buying committee? What's your use case? Where are they located? There's more to it than that, but that gives you an idea of what your addressable market should be.
Yeah.
So I'm trying to give you some tools to help you define that addressable market, right? So if you want to talk about some of the tools that are on there.
Yeah. So ZoomInfo is a great one that has a lot of capabilities inside there. LinkedIn Sales Navigator. For the price point, you can get a lot of great contacts and abilities inside there. Owler,
love Owler.
We got to pitch out Owler. They're amazing. They have a great team over there.
Crunchbase, large database inside there. And then, did you want to say something about D&B?
D&B, I use that when I was a financial advisor to help me figure out what small businesses I should go and target. Really, you're getting an overall scope of what's out there. And do I need to shift? Do I need to adjust? The next thing after revenue cycle, the next thing after addressable market is the marketing messaging, right? And so we all know the traditional ways that you can message, your website. You want to focus on SEO, get people to there, targeted, pay-per-click ads, webinars, blogs, podcasts, emails, YouTube channels, direct mailers, events, and trade shows.
So many different ways.
Anything, and I love the more creative, the better, in my opinion.
Yeah.
But these are some of the traditional ones. So the traditional ways that marketing has gotten your message out to the world. A couple of tools we're looking at pay-per-click, Google Ads, Twilio. You're looking at email, Marketo, HubSpot, Eloqua, direct mailer. Pixingo is doing some really cool things with focused around greeting cards. And then you've got Sendoso and Alice. All these tools are there to do one thing: get the message out, right?
And two, with Pixingo, that the automation that they have with that card sending, really neat,
really cool. So here's the hard part. As sales and marketing leaders, as CS leaders, we want to go in and we want to play around at this point. And now it's with the audience.
Yeah.
Now we've got to let the audience just let it rise. You want to make sure you don't underdo it. You don't overdo it. You want to make sure it's just right. That's harder than you think, right? How many times do we hand leads over to the sales team? And I've worked on both the marketing and the sales side. You hand leads over to the sales team, or you receive leads as a sales team. And what do you want to do? I want to go and call everybody right now, full bore. It might not be time. On the other hand, if you let things sit too long, they're dead, right? So you got to make sure it's just right. So how do you do that? Well, that's where you need to start paying attention to signal data, right? Signal data is a place for you to listen to what the audience is trying to tell you, and not just explicitly, but also based off of what they're doing. And I'll get into that. And the tools really depend on what you're listening for. And there are three things that you really want to listen to. You want to listen to their intent, you want to listen to their behavior, and you want to listen to their fit. We'll go into these here in just a second. So intent, what is that? I think we've talked about that. I know that in the keynote they spoke about intent. I know that in Dave Delaney's presentation, he spoke about intent. But you're looking for, what are they doing out there on your website and in the dark web, both, to say, hey, I'm looking for a solution like yours. 6th Sense and Demand Base, they will tell you that someone's in the consideration phase, that they are out there looking for things like yours. At Signals, we'll go ahead and tell you, hey, when someone is poking around on your high intent pages, like your blog posts or your white papers, it's really important to listen to make sure that that is something that they're actually looking for. The next thing is behavior. So are they coming to your website to begin with? How many times have they been to your website?
Pages.
What pages are they looking? Are they looking at your careers page? In which case, it's probably not a sales or marketing motion. Maybe your recruiter to take a look at that. But you wouldn't want to be targeting people who are just looking around to apply for a job at your company, right? Yeah. Are they opening up emails? Are they clicking on your emails? All these are things that marketing automation, all these tools can go ahead and help you with. The next one is fit. Fit, you're going to look at two main things. One, their firmographic data. Firmographic data is going to be something like, where are they located? How many employees do they have? What's their industry? Technographic data is going to be things like, what's their tech stack? What are they using? Do they use complementary data that's going to help you sell into that group? We certainly help with that. Zoom Info, you can see some of that data. HubSpot, LinkedIn Navigator, you can all see if there's that fit there, right? The idea is, let's go ahead and make sure that they have intent, they're doing the right things, and they're the right kind of company. they're ready to be engaged.
This really makes your ICP, right?
Mhm.
And it takes it to that next level. It's not just saying, oh, who's our ideal client? Just saying, well, these guys are great. These guys are great. This is actually breaking it down and saying, these are the things that make our ICP.
Right. And it's going to do a couple things. It's going to, number one, it's going to bring to the top the people that your sales team should be engaged with. But number two, it's going to filter out the noise, right? So that you're not wasting resources on going after just the noise.
Yeah.
All right. So we've talked about intent, behavior, and fit. The next thing to talk about is active listening. And I know this is something that Mrs. Griffiths, my second grade teacher, would talk to me about active listening.
Wow.
She'd be talking and I would be off drawing something, not paying attention. And I'd say, I'm listening. She's like, yeah, but you're not actively listening. Well, we need to do the same thing with our data and with our leads. So what does active listening mean? Well, you need to be able to alert the revenue teams that an account is ready to engage. 2, you need to be able to change course if it's not ready to engage. 3, you need to be able to enhance the data to make sure it's better. And then 4, when something is ready to engage, you need to kick off that appropriate engagement. So you might use a business intelligence tool like Domo. Great tool there that helps consolidate all of this data in one panel. Signals, it's part of what we're doing, is that active listening. You need to throw it into a CRM. So you have that single source of truth that Sangram talks about in his book a lot. So HubSpot or Salesforce, one place that everybody agrees on, revenue operations agree on, this is the single source of truth for all of our data.
Yeah.
So once you have that, this is an inflection point. So you can see I added that line that goes back to marketing messaging. You need to be willing to say, hey, listen, this particular lead, this account, it's not ready yet. So we're going to send it back up and have marketing message some more. And you go through that cycle until it's ready. Once it is ready, you go ahead and you send it over to the sales team to go ahead and engage appropriately, right? But one thing I want to highlight as a difference is these leads that are going initially over to the audience. Those are what we traditionally call MQLs, a name, what I call a name and a phone number, right? It's not much more than that. However, once something has gone through and you've listened to the intent data, you've listened to the behavior, you've actively listened to the signal data as a whole, now that's not an MQL anymore. Now that is a highly qualified lead. You know that they're a company that you can sell into. You know that they are at least aware of you and they're looking around at solutions like yours. And you know that they've been poking around your website. That is a highly qualified lead. And if a sales team pushes back at that, you probably need to have a talk with your sales team. So what does engagement look like? Well, it's how the sales and marketing team, how the sales team specifically is going to reach out. And it should encompass all possible communication channels. So with Signals, we can help with email and we have chat on there.
Yep.
We also want to integrate with tools like SalesLoft. We're working on that integration right now. I get to test it out and I love it. But it allows us to kick off that cadence. So now this is a highly qualified lead. Great. Throw it into SalesLoft or Outreach or Groove. So now you've got that cadence tool. So now the team is reaching out. I think one of the worst things you can do, and one of the worst things that marketing teams do, is when I used to hand over a list of highly qualified accounts over to the sales team and say, go for it. And they look at the list and they're like, okay, this is just another list that I've got to go ahead and follow up on. Throw it into their cadence so it's just the next thing they need to worry about, and automate that as much as possible there. And then also I throw Connect and Sell on there. I love that tool. It just allows you to, in terms of dialing, integrate that with those other tools there, really amp up the amount that you're able to call out in a single go around. So,
and ease of use too.
Oh yeah.
Yeah.
So special shout out to those guys as well.
Yeah.
So then it's going to turn into realized revenue, right? That's what we're all hoping for, that realized revenue. So I want to look at that and like, how does this look in action? So we're going to take a use case that we saw personally, here at Signals. It was someone we were working with that had an ICP, an addressable market of 300,000 potential accounts, right? Big, but not massive. And they were trying to reach out to it. And so what they did their email drips, they hosted blogs and webinars, they attended events, they did SEO on their website, all this stuff. And they were really excited to see what it would bring into their audience. And it brought them 170 visitors.
To start,
they were not thrilled. They were not thrilled that of these 300, there were more visitors than that, but of these 300,000 potential accounts, 170 of them hit their website. Not overly happy, but they listened. They used their signal data. So they looked for who is reading their white papers, who's been to the website 5 times. I think it was like 3 to 5 times. Where's there that firmographic fit and that technographic fit, right? And so they listened actively. And to those, they pushed off to their sales team and had them engage right away. But this is where it got really cool, is to those that didn't qualify yet, they continued to engage the marketing machine. So they used the active listening. They actually used Signals to go ahead and enhance the data. And so from those 170 visitors, or the 170 accounts that were on the website, they enhanced the data to look for the contact data for the buying committee, the entire group that they want to go ahead and talk to. So automatically it brought in 2,000 contacts and 1,500 emails. From those emails, they sent those new emails they didn't have before. They knew these accounts were active, right? They hadn't opted in, but they were interested in the messaging that this company had. So they sent out the first email. And I'll say this, just as a frame of reference, a spam email, you're going to see an open rate of about 1%. A subscription-based opt-in email, you're going to see something about 30%. The first one they sent out, they saw a click rate of 8%, right? It's part of a cadence. They sent out a second email. Now they saw a click rate of 25%, because this was a subset. This was a group that would really resonate, or the message would resonate with them, rather.
very
Right.
targeted.
Very, very targeted. Yeah. And so this came back through. At this point now, they were ready to engage appropriately. So what does that mean? Well, they sent about 500 highly qualified leads over to the sales team. The sales team could engage with 500 of those leads. And what that resulted in, 75 closed deals. That's about a 15% closed won rate. 75 closed deals. That is the power of signal marketing. We need to be listening to the data that we have out there. We need to be reacting to it, and we need to be engaging with it appropriately. So thank you, Derek. Appreciate it. If there are any questions, we're happy to answer them, but go ahead and reach out to us. We're both on LinkedIn. I'm on, there is Steve Error and Sterling Kump. But also if you want to see and learn more about signal marketing, reach out to us as well. We're happy to talk to you about it, show you how it works, and share anything we can with you. Thank you very much, and enjoy the rest of the conference.
Thanks, everybody. Have a great day.
Oh, there we are. Thank you so much, Stephen Sterling, for that wonderful presentation, just displaying everything that you can do with the Signals platform. Right now, we are nearing the top of the hour, which means that we have Block 2 opening up in a couple minutes. We are excited to hear from a couple of groundbreaking presentations. First up, there is a breakout session from Jeremy Audrin of Broadcom and Gar Smith of Mindcast. And they have some awesome information that they are sharing about upgrading your tech stack and the different approaches that companies use depending on if you are in growth mode or if you're already a very established company. And they share some insights on not only how they buy depending on where they're at in the growth cycle, but also different strategies that sales reps can use to break into those companies. Additionally, we have a presentation from Kyle Friedis and Molly Bodensteiner. Their presentation is unlike anything I've ever seen before. It's super groundbreaking, and they use ChatGPT in a way that really hasn't been done before. So I invite you to go and watch that. Additionally, you can check out Mason Cosby's presentation. He dives a little bit deeper into dark social. I know that's a really hot topic right now. And so I invite you to check that out if you are in marketing or sales and you want to learn a little bit more of the high-level review topics regarding dark social. If you're looking to learn more about targeting accounts by personality type, I suggest you join with Dan Baird. He's from Wrench. He's one of their founders, and he is phenomenal, and he has so much great information on how you can target accounts by personality type. Danny Reed and Evan Dunn are sharing about how to do more with less by automating your demand gen work. And finally, Tracy Kraft of Demandbase is diving into revenue marketing analytics. We invite you to join any of those breakout sessions on the RevTechSummit.com. Up next, we're going to be hearing from Shiv Naranayan. Shiv is the founder and CEO of How to SaaS. They're a marketing strategy consultancy firm that works with leading private equity investors and CEOs. Additionally, he is the author of the #1 bestseller, Post-Acquisition Marketing: How to Create Enterprise Value in the First 100 Days, which provides a framework for all PE companies, and they can use it to, oh, I'm so sorry. We have some sirens going by. A framework for all PE companies that they can use to grow their portfolio investments faster. Prior with working for How to SaaS, Shiv was the CMO of Wild Apricot. We're excited to learn from Shiv in this live session here at the RevTech Summit, and he is going to be sharing his insights for leveraging your data and turning it into revenue. Hi, Shiv.
Oh, hi, Nicole. Thanks for having me. Can you hear me? Just checking to see if you guys can hear my microphone here. Nicole, can you just give me a heads up in the chat if you can? Yeah. Okay. Excellent. Thank you very much. Hey, everyone. Good to be here and excited to do this session. What I'm going to be talking about today is to help companies, regardless of stage, to figure out how to scale their marketing efforts. And so whether you're a startup or you're a 100 million plus company with multiple product lines, the frameworks that I'm going to walk you through are going to apply. And it's a matter of just adapting them to your particular use case. So with that said, the first thing I want to talk about is marketing starting points. Every business has a different starting point that is a unique marketing puzzle and has different challenges, constraints, and opportunities. So the way we think about this is there are 5 buckets that we can put most companies into. Number 1 is that it's a new go-to-market. So you can think of this as a startup or a new product launch. In this case, the founder is usually leading marketing and there's limited or zero marketing investment. Number 2 is a sales-led marketing organization or business overall, where sales is the primary revenue driver and marketing is a support function. And about 10% or less than 10% of pipeline is actually generated by marketing. Number 3 is a nascent marketing organization. And this is what we find a lot of B2B companies that are sitting in this stage where marketing investment is about $300,000 or less. The marketing team is 1 to 3 people, and the marketing generated pipeline is about 10 to 15%. Fourth is a organization where marketing has some impact, and here you'll see contribution of pipeline be 15 to 25%, sometimes 30%. And the marketing team is about 4 to 7 people. And then the last one is a sophisticated marketing organization where marketing is generating 20 to 50, sometimes 70% of pipeline, and the marketing team is larger than 10 people. This is rare. And what we find is when we take all B2B companies and we map them on a continuum of marketing maturity, most companies will sit between stages 2 and 4 in terms of how much is being invested into marketing and how much pipeline is marketing generating overall. And the reason this is important is we want to get to this fifth stage, right? The more sophisticated you are, obviously you're driving more pipeline, and the higher the odds that the business will, on an overall level, hit its revenue projections and actually be a more healthier business. Whereas if you have less marketing involvement, it's far more likely that sales misses quota or sales is not hitting its targets. And so we want to build an organization where marketing is actually contributing to revenue more. And so the question is, how does marketing get there? How do we make marketing into a more sophisticated organization? The way we think about this is with 5 layers, where layer 1 is your foundational layer. This is where you have to understand the business context, your overall funnel efficiency, what are your unit economics, understanding the market that you're going after, the ICPs, and your overall branding and how you're going to be competitive in this space. Layer 2 is your infrastructure. This is where things like your website, your tech stack, your product marketing house, your revenue ops need to be in order. Layer 3 is your planning layer. This is where the right strategy needs to be deployed for your particular organization. You need to have the right demand gen roadmaps and programs in flight. You need to have the right content created for your particular entity. Layer 4 is resourcing, and this is where you need to have the right people executing on those roadmaps and have the right budget for your particular organizations. Excuse me. And layer 5 is ultimately revenue growth. And this is what we all want, right? So everyone's trying to drive to that layer 5, but oftentimes layers 1 to 4 are not complete. And oftentimes some of those buckets are not done at all or very immature. And so most organizations that we come into look like at-risk businesses where they may have a website, they may have a tech stack, they may have done some content, but overall, they don't really have a revenue operations infrastructure in place. They don't have their branding and product marketing figured out. They don't have the right strategy. They don't have the right demand gen programs built out. And most common of all is their marketing budget is not sufficient enough to get to the revenue growth targets that they want to get to. And so the right approach is to build a company that kind of snakes its way through this pyramid and goes layer by layer through the top to make sure every one of those boxes is completely filled out. And this kind of ensures that we get to the revenue growth as quickly as possible, but while building all the pieces we need to make sure that we have a stable house on the marketing side that's actually an engine that can actually drive revenue for the business. And the idea is that as we build more aspects of this pyramid out, marketing's contribution to pipeline and revenue increases exponentially. So a sophisticated marketing org might be like a company like Shopify, where marketing is driving a ton of inbound and outbound driven pipeline for the business. And a new go-to-market would be on the other extreme where marketing is barely making a dent, the founder is driving sales, right? So the more we build out those pieces of the pyramid, we move towards the right side and pipeline increases significantly. Now, given the different stages in which we find companies, there are situations where urgency is through the roof. And less likely, one of these might be buckets in which your company sits in. So one is a new acquisition or an investment has been made by an investor. And this is where a company may have been bought out by private equity or raised money from VCs. And the goal is to ramp up marketing in the first 100 days. And so we need to work through those layers as quickly as possible. Number 2 is a founder who's looking to potentially exit or raise capital, but before they go and raise the money or go exit their business, they need to be able to have the right story built out for marketing and the right metrics and numbers in place to have the right plan for marketing. And so urgency is high there. Third is an M&A platform that is bringing together multiple companies into a single platform and either merging them together or adding on companies every quarter to tell a broader story and build a portfolio of products and solutions for a particular market. And in these cases, you have such a large team working on a large set of products that everybody's kind of stretched thin, and we need to move quickly to actually integrate that platform to capture synergies like upsell and cross-sell opportunities. And the last piece would be transitions where either the company is is changing teams. Maybe the leadership has changed. Maybe there's a new CMO, new CRO, new CEO, or maybe we've changed our overall strategy and positioning. Maybe we're shifting from more of a sales-led model to a more product-led model, and that requires us to actually work through that pyramid all over again, and build the right structure for marketing to be able to drive revenue. And so the idea is that we need to get to the top 3 layers as quickly as possible, because that's where the bulk of the value is created, right? While having the right website is important, while having HubSpot or Salesforce implemented is important, until we actually have programs out in the wild actually driving pipeline for us, we're really not making a dent in overall revenue growth. And really what we want is revenue growth. So being able to get to those first 3 layers as quickly as possible is the key. And the way we do that is in layers 1 and 2, you get to a good enough state. Think of it almost as like an MVP of those different boxes, so that we can ultimately focus on the strategy, demand gen, content, team, and budgeting pieces, because that's what's going to drive revenue growth for the overall business. And so how we do this is, and the presentation I'm going to walk you guys through, is to focus on that top part of the pyramid, is to say, how do we build the right strategy? And from there, how do we inform our data ops and analysis to bring the right insights in? How do we build the right roadmaps for demand gen and content? How do we build the right team and org structure? And ultimately, how do we figure out the right budget and financials required for marketing to actually drive more revenue for us? So let's start with number 1, building the right strategy. Depending on the business model that you have, an entirely different strategy might need to be the focus. So on the left side here, you have a business that's low ACV and high TAM. In this business's case, because the deal sizes are smaller and they are going after a large market, they need to focus primarily on inbound channels. So this would be paid search, paid social, SEO, maybe a ton of nurture content that they're creating for the people that are coming inbound. On the right side, you have a business that's high ACV, limited TAM. Maybe they're targeting 600 of the largest hospitals in the country. Well, they need to be very deliberate in terms of who they're going after and focus on more one-to-one or one-to-few type of messaging through ABM. They probably have to build out a ton of sales enablement assets, and they likely need to do some form of customer marketing, which is once they land one of those big accounts, there's probably a land and expand strategy in place to actually grow the value of that account with the business, because there aren't an infinite number of targets out there for us. So depending on the types of businesses that we have different levers that we need to pull to actually grow the business from a marketing perspective. So again, on the left side, if you're low ACV, high TAM, your lever might be increasing website traffic. And this might mean that we're spending more on LinkedIn ads or Google ads or Facebook ads. It might mean we invest a ton more into SEO content. And the more we drive traffic, then we got to increase the number of people from that traffic that actually get into a free trial state for us, or even a demo if we're able to afford that, and get those demos or free trials into paid conversions at a higher rate. Those types of levers are different when we look at on the right side, where we have a high ACV limited TAM model, where now the growth levers are cross-selling to our existing base. We're targeting our Dream 100 customers. In those cases, we're trying to expand the accounts. We're trying to focus on one-to-one messaging and running targeted campaigns to those accounts. So here, we might still use paid social as an example, but we might use something like 6 Sense to deploy an ABM program to those accounts versus necessarily doing a fishing with a net approach on paid social to anybody that's interested in our product. And this matrix here kind of maps out how you need to think about the different channels and programs available to you, depending on the ACV and business model that you have as a business, to focus on the marketing side. So you can see like paid media is important for basically all types of businesses, but it's definitely more important the lower ACV that you are, right? So if you're less than 1,000 in ACV, yeah, paid media and SEO have to be super important for you. Whereas if you're 300K plus as an average deal size, maybe SEO is not that important for you, because are the top 600 hospitals in the country really looking for infrastructure software online, or is it more of a targeted sale through which they buy? Conversely, if you look at ABM, it flips, right? ABM is not important at less than $1,000 per year as an average deal size, but it becomes super important at that 300K mark. So we can quite easily map out which activities are very relevant to us, depending on the type of product we have and what our pricing strategy is and who we're going after. And based on that, we can craft our marketing budget to split out across these programs accordingly to make sure that we're allocating that budget correctly. And this is an example of that, right? In this case, This company, we're saying they should spend about 27% on paid media, about 25% on content, and ABM, events, partners, and customer marketing makes up the rest. But this pie chart may look very different for a business that is super high ACV and enterprise go-to-market, where ABM might make up over 60% of the budget, and then the rest kind of shrinks down into the remaining 40%. Number 2 is marketing data analysis. So based on the strategy that we've identified, now we need to look at what data we have historically that we can take a look at and use that as analysis for ourselves to inform where the right places to deploy our budget are. And there is always a lot of insight available in where we've previously spent money. So we have to start there. And then in cases where you don't have a ton of historical data, then we have to extrapolate based on forward-looking analysis that we can do. So we're going to get to that, but first we've got to start with the historical data. So what we want to be able to figure out is ultimately how many leads do we need to get close one deal? And a lot of marketing teams can't get to this answer, and it is a very important answer because it helps us figure out what is an acceptable cost per lead for us. So as an example here, in this business, we're looking at conversion rates. If you look at their lead to MQL rate, it's 14%. Their MQL to SQL rate is 18.5%. And their SQL to win rate is 33.15%. So overall, MQL to close, they close about 6.14% of leads into close one deals. This is very important for us to know because if we do the math backwards, it helps us figure out what is an acceptable cost per lead for us to break even on our marketing spend. So to break even at month 12 on our CAC, we can spend about $205 per MQL in this business's case. If we had the luxury of being able to break even at month 15, then that number is $257, right? So depending on what our cash flow situation is, what the overall business strategy is, we might set this benchmark at a different amount, but it's important to have a benchmark because then we can evaluate all of our marketing activities against those metrics. And so here's an example of a business where they have an acceptable cost per lead in the first column, in the second column here, and then they have their actual cost per MQL in the third column. So some of these channels they're doing really well with, where let's say on physical events, I would say physical events are not doing as well. Let's say pay-per-click, they're spending about $142 per MQL, but their acceptable cost per MQL is actually $271. So they have significantly more per MQL that they can spend on this channel, and they're way more efficient. So this becomes a channel that they can likely scale up. Conversely, if they look at physical events, their actual cost per MQL is actually higher than their acceptable cost per MQL. So this then becomes a channel that they need to think about scaling down or at least finding some efficiencies around so that they can potentially reallocate that budget to a more profitable channel like paid media. And if we do this exercise and we drill down into every single channel and every campaign that we're running, we're going to find a ton of efficiencies. So my one takeaway for the group is even if you don't increase your marketing budget, if you just go through this exercise over the next 3 to 4 weeks and identify which of your campaigns and channels are doing well versus which ones are inefficient as per your acceptable cost per lead, you can identify at least 20 to 30% of additional pipeline that you're likely leaving on the table at your current budgeting level. So in this example, this company is spending a ton of money on this keyword cluster B, about $83,000, and their pipeline per close one revenue is about 38 cents on the dollar. Conversely, they have another campaign where they're getting $5 or $4.81 back for every dollar they spend, and they're only spending $8,000 there. So very quickly, this becomes a reallocation exercise where we want to move the budget from the $80,000 campaign to the $8,000 campaign, and likely we're going to see a lift. Maybe we won't see a 5-to-1 ROI, but we might see a 2-to-1 or 3-to-1, and that's significantly better than what we're currently seeing with that existing spend. And so this is an example of waste that sits inside every organization that I encourage you guys. And paid media is probably the easiest to do this with, but if you do this with events, if you do this with content, if you do this across the board, there are likely a ton of opportunities to be found. Okay, number 3 is demand gen and content. So based on the data and the analysis that we've done so far, all we've identified so far is what are the reallocation opportunities for us and where can we deploy our budget more effectively within our current set of channels and campaigns. But what we also want to figure out is what are the additional programs and channels and campaigns that we can invest into going forward. And in any company's set of potential opportunities, they're not investing in all the potential opportunities out there. So what we need to do is we need to actually go map that out and figure out what do we start with and what does that roadmap look like and what is our highest priority item. So this is where we look at buyer journey stages, and this is a framework I want you to think about. We call it our hot, warm, cold framework. But if you were to map out every stage of the buyer journey, so awareness, knowledge, consideration, and you added swim lanes of hot, warm, cold across those stages, you can identify buyers have different needs at every stage of the funnel. So on the top right, where it's the hot swim lane and consideration, if someone is on an inbound software's website, they might need to test drive the software and start a free trial. Conversely, if someone is in that knowledge and warm stage, they might need a consumer guide to understand the problem, to figure out what are all the possible solutions out there for them to figure out to solve their pain point, and is the software potentially a good solution for them? So we need to educate them on that stage. And so if we map out every single one of these boxes, we're going to identify a ton of needs for our buyers at every stage of the funnel. And what we want to do ultimately is we want to move from the top right part of the matrix down to the bottom left. And one of the things that I've seen a lot of companies make the mistake on is when they're looking at their marketing opportunities or their roadmap or activities in general, they may have a ton of campaigns or initiatives running on the bottom part of the matrix, bottom left part, but not enough work has been done to build the foundational stuff that sits on the top right part of the matrix. So working backwards is key for a few reasons. One is it's the lowest hanging fruit because it's where customers are already ready to buy. Two is that from a political capital standpoint, being able to validate our initial marketing spend and driving pipeline from that is huge to get us more budget to do the additional things that we need to do. And three is that most companies are not maximized on the top right part of this matrix. I would argue even $100 million companies, we've seen a ton of them that do not have enough campaigns in flight on the top right, but they're busy starting a podcast. That's not to say that starting a podcast is not a good idea. It's just that we need to have the things built in the right order so that when we do start something like a podcast, everything else is built out and the leads can kind of flow through the rest of our funnel. And by the way, I see some questions coming through, so I will definitely address that at the end of the session as well. And so we want to do this working backwards exercise across all channels. We want to do it for paid media. We want to do it for content, SEO, product marketing. We want to do it for sales enablement. We want to do it for ABM. We want to do it for cross-sell, upsell. And cross-sell, upsell is maybe more challenging one to understand, but think about it like this. If you're trying to do a cross-sell, upsell opportunity, the first thing you would want to do is do some data analysis to figure out which of your existing customers are best fits for one of your other upsell opportunities. And then maybe look for buying triggers, and you narrow down the list even further, and that becomes the first set of customers that you reach out to and work your way backwards on that, right? So it's the same framework, but when we're talking about upsell and cross-sell, it kind of feels like a slightly different part of the funnel, but the same principles apply. Next, what you want to do is you want to identify opportunities to scale. So in this business's case, they see a pretty good ROI on their spend. So and again, I use paid media because it's the simplest example. So if you have $24,000 in spend and you're generating 1.6 ROI on that spend, well, that becomes a good business case for us to scale the spend across all channels. So identifying additional opportunities from those campaigns, we can say that, hey, instead of spending $25,000 a month, we think we should be spending $50,000 a month. And we're going to increase our annual investment to $600,000. And if that holds, we're going to increase it one more time, right? So you want to do this tiered approach and constantly recheck the data to see if your CAC payback period metrics hold, if your acceptable cost per lead holds. And as long as it continues to hold, we want to be able to scale spend on those channels. For content, the ideas are a little bit different because it's more qualitative, right? With something like SEO, even you can put numbers around it, but content is a little tougher because like I'm talking about more different stages of the funnel content, not just SEO, where you might need nurture sequences between MQL to SAL stages. You might need better sales enablement assets that get your opportunities in through to closed one. whatever those assets are, what we need to do is we want to map out our current content inventory across the different buyer journey stages and identify where the biggest gaps are. So in this company's case, the missing assets or types of assets are case studies and key pitch decks and how-to videos that can help them sell better. So this becomes a key priority for the content team to execute against. Even though we don't have like an exact dollar value that we can associate to a particular asset, that seems to be a pretty glaring hole that we need to fill for us to be able to drive better conversions. And the way we actually validate this is by looking at stages of the funnel and saying, hey, our SQL to close rate is about 35%, so it feels fairly healthy, but our SAL to SQL rate is only 10%. So this becomes an area where we should probably focus and add some content assets, because more of our sales accepted leads should be getting to opportunity status because we know they're good fit leads. And so that's how we can build some business cases and prioritization for that type of content. Next, you want to actually map the revenue opportunity that is tied to bigger initiatives for the business. So in this business's case, there is a payments platform that the business is launching. They're launching a partner program. They need to do ABM to their Dream 100 accounts, and there's cross-sell, upsell opportunity. For each of these, we're looking at investment required in terms of where content can support and where marketing can overall support, and what is the revenue opportunity to tie to those initiatives. So instead of thinking about it as like every content asset needs to have an ROI, it's the initiative that has a big ROI that requires support in the form of different campaigns or content that needs to be created, or sales enablement that needs to happen, or paid media that needs to run. And we can justify the spend on those initiatives based on the overall revenue opportunity. And so when you take all of this together, if you take our strategic priorities, the revenue opportunity available, our financial targets, inefficiencies in our funnel, and the buyer journey gaps that we have across the board, you can take all of that and put into a consolidated marketing roadmap. And this is one of the key exercises to actually identifying what should come first versus second versus third. So for example, SEO might be something that has opportunity for you, but it might turn out that based on your strategic priorities and the revenue opportunity that's available, it's much lower on the marketing roadmap, even if there is SEO opportunity out there, right? I see a ton of people just chase the fact that there's traffic there when there's other strategic priorities that we have as a business. So by looking at all 5 of these dimensions across the board and then scoring all the different opportunities you have, you end up working on the right things as a business. Number 4 is the team. So depending on where things shake out for your business on that roadmap, you're going to need a different type of a marketing organization. For simplicity's sake, I've given you 3 types of phases of marketing organizations here, just to understand like where you are yourself as a business and what type of marketing organization is likely required at that stage. And then based on the opportunities, you likely need a different organization as well. So phase 1 is an MVP marketing org. This is where you likely need some sort of a marketing leader. Doesn't have to be a VP or CMO. And they have some support in terms of content and demand gen. And the rest is staffed out by freelancers and designers and other dev resources that you have for your website and things like that. Phase 2 is a marketing org that's become a little bit more mature. You have a VP of marketing, maybe you have leaders for different functions like demand gen, like content, and then you have people underneath those leaders that are running the day-to-day operations within content, within corporate marketing, within paid media, etc. And so the marketing organization overall is able to contribute more to revenue at this stage and able to handle more complexity as well. And phase 3 is where I'd say as you become a larger business, you have additional product lines. Maybe you have additional regions that you need to staff out for. And so this is where the need for a true CMO emerges. And you then have VPs under that CMO where you have a leader for demand gen, maybe a true leader for marketing ops. And then you have regional experts, maybe let's say APAC or for Europe or Latin America, and maybe there's language requirements for those regions, and you need different materials as well for sales enablement. So there's a lot more complexity to manage at that stage. The key thing is to know where you are as a business and what the opportunities are so that you're staffed up correctly. If you're actually in phase 3, but your marketing organization looks like it's phase 2, then there's a mismatch between what targets you need to hit and the team that you have that's capable of actually hitting those targets. For example, if you actually do have global sales targets, but you don't have a global marketing team that actually can roll out programs across different regions, there's a problem, right? So we want to make sure that we're always staffed up the right way. And so that's where our hiring roadmap comes in place, is based on the marketing roadmap that we built out for demand gen, for content, and based on where we are as a business, we want to identify the key roles and the priorities for those roles and how much it would cost us to actually hire those roles. So take the salaries on the right with a grain of salt. It depends on where you're located, but overall the idea is to have a prioritization for which roles we need to hire first to be able to move the needle the most for our business. Number 5, budgeting and financials. So based on all the work that we've done so far, what we ultimately need to do is build a revised marketing budget. So first is we need to look at our financial projections and look at how much marketing budget do we need to actually hit our bookings projections. So we did the data analysis work to see that for every deal that we need to close, we need X amount of leads at the top of the funnel to actually drive that much revenue, right? So if we were to look at it overall for our entire bookings target, are we close to the MQLs needed or far? So in this case, if you look at this business, this business needed to close 12 million in bookings. They needed 56,000 MQLs to get there. They actually only had 41,000 MQLs. So you can see a 30% shortfall in their ability to actually hit that bookings target. And a good way to think about this is that if you miss sales targets today, that's likely in large part because you had a marketing problem yesterday or 6 months ago. And so we want to make sure that we're generating the right MQLs in every quarter to support the bookings target that we needed. Next, we want to actually forecast the budget required. So if we look at our bookings target by year and look at the number of closed won deals that we need, we can work our way backwards and say how many MQLs are actually required to hit that target. And then because we've done the data work to identify what our acceptable cost per MQL is, we can actually forecast the amount of programs budget we will require to support that bookings target. So in this case, if this company increases budget from 1.9 million in 2020 to, let's say, only 2.1 million in 2022, they're likely setting themselves up to fail because they actually need a budget of 2.59 million to get to their targets. And this is very important to communicate at an executive committee or board level, because that shortfall is kind of hard to understand if, let's say, the CFO and the CEO get together or the board gets together and does this as a financial exercise to say, we're going to give 12% of our budget to marketing, right? Because it's possible that they do that, but you are definitely at a shortfall in terms of the MQL target you need to hit to get to your revenue targets. Next, what you want to do is the opportunities that you've identified, you want to actually add a timeline of for how the marketing investments will be made, so you can stagger out the investments and the different projects that are underway. So in this case, it's paid search, there's funnel tracking and all of that, but that should all roll into your overall marketing budget, and you're trying to figure out what your marketing budget overall shakes out as. And you want to map the budget asks to the key initiatives that we've identified. So we mentioned the payments platform, partner program, Dream 100 accounts, cross-sell, upsell. Well, by tying our budget asks to those initiatives, we are far more likely to get the increased headcount. A big mistake that I see marketing teams make is they're attaching headcount to just overall marketing spend instead of actually saying, hey, in order for us to be able to do well with targeting our Dream 100 accounts, we actually need 2 ABM marketers. We need to increase paid media spend. By saying that in the right way, by building the right business case, you're far more likely to get funding for those initiatives. And so in summary, and this is how I'll close this off, is to say, we're doing all of this work ultimately to be scientific about marketing. And what we want to be able to bring to the table, whether it's to our own team meetings, whether it's to the executive committee, whether it is to a board meeting, is to say that we have done the underlying data work and are being very scientific in terms of identifying where the biggest opportunities are for marketing and being very deliberate in terms of where we're investing our limited marketing dollars. And that inspires a level of confidence with CEOs and with boards to give marketers far more leeway and leverage in terms of how much trust they're given, how much budget they're given to actually take the organization to the next level. So I will stop there and see if we have some time for Q&A. I see from Nicole, we're running short on time, so we may have to skip that. So if after this session, if you have any questions, please feel free to message me on LinkedIn or email me, and I'll be happy to answer those on those channels. So thank you.
So I'm so sorry about that. I've been talking with my mute on. So thank you so much to Shiv for sharing your insights into revenue analytics with a data approach. Make sure to follow Shiv on LinkedIn. If you have any questions, feel free to message him directly. He has such a wealth of knowledge that is just incredible, and he shares so willingly. Additionally, he has a newsletter. It's called SaaS Marketing Simplified. It's incredible, and I would invite you to subscribe to that. If you're looking for a new read, he also has a book, The Post-Acquisition Marketing. It's an incredible read, and I would highly recommend it. We are looking forward to learning from Dr. Shannon Gregg and Dr. Doreen Silinetti. I'm so sorry about that. They are speaking next. Dr. Gregg is the president of Cloud Adoption Solutions. They are a woman-owned Salesforce consultancy focused on change management and user adoption for regulated environments. Additionally, Shannon is an adjunct professor at Point Park University, and she is the course author for their class Technology and Innovation in Marketing and Sales. She has additionally taught courses in professional selling, advanced professional selling, and principles of marketing. On top of being a CRM guru and a top-tier teacher, Dr. Gregg is also the author of It's About Time, How to Do More with What Matters in the Time That You Have. Dr. Gregg is joined by Dr. Doreen Silinetti. Dr. Silinetti is a guru of marketing and sales. She has over 20 years of experience in teaching the next generation of marketing and sales professionals and has taught and written courses for Point Park University and Duquesne University. Dr. Silinetti is passionate about teaching, engaged in research, and committed to service. Additionally, she has been recognized for innovation in curriculum design, community engagement, and assurance of learning in higher education. Both of these incredible women are professors of sales and marketing at Point Park University, and they have literally written the book on these courses. We are so excited to learn from their expertise. I'm going to go ahead and welcome them to the stage now.
Great. Thanks for having us, Nicole. Hey, Dr. Silinetti, how are you?
I'm great, Dr. Gregg. How are you?
Fantastic. Super excited to be here today.
I am as well. So, shall we get this started?
Absolutely. I'm going to start sharing my screen if you would like to introduce yourself.
Absolutely. Well, I'm Dr. Doreen Silinetti, as Nicole mentioned, and I am just so thrilled to be joining you today to talk about sales and technology and the future. One question that I'll pose to all of you is, how many of you have a pipeline issue? Anybody have a pipeline issue? Not just with your clients, but with your sales staff? My guess is at least a few of you do. And one of the reasons that we're here to talk today is because sales education, especially formalizing sales education, is one really important way that you can start to address pipeline issues. So as you think about your own sales and moving forward and how you're going to grow and advance maybe your career or the sales organization within your company, now think about what pipeline means to you and think about what you hope new entry-level sales reps will know and be able to do. So there are a couple of things that, as we think about sales curriculum and moving sales into a university space, that are really important to us. And I should also mention that I am absolutely thrilled that Dr. Gregg is an adjunct faculty member at Point Park University. She is just fabulous, and it has been such a pleasure to work with her in building our sales program and building a variety of sales and marketing courses. And one of the things that Dr. Gregg and I have talked about regularly is this idea of perception. A challenge that we have noticed when students come to university is that they don't typically understand professional sales. They often have perceptions that aren't really grounded fully in reality. Certainly these perceptions come from somewhere, whether it's movies and TV and negative representations of sales professionals, or whether it's their own experiences with maybe a less than ethical sales professional, someone who's really focused on just getting the sale and not really focused on addressing a customer's needs or really solving a problem. So perceptual issues are typically one of the first things we face when we teach sales courses at a university level. And one of the things Dr. Greg and I do is work really hard to try to address those perceptions and really change that mindset. And I'm always very excited when on the first day of class, we ask, how many of you are interested in getting into a sales career? And maybe we get one, once in a while, we might get two. And at the end of the semester, when we ask that same question, typically that number is much greater. It doesn't mean that everybody says, yes, I want to work in professional sales. That's now my new career goal. But it's that they have this respect and understanding of sales, and they see how they can really add value to an organization. They see how they can work to solve problems and satisfy needs and really make a difference. And, that intrinsic reward can be important. They certainly also are kind of excited to hear about some of the extrinsic rewards and the idea of commission and bonus structures. That's certainly beneficial as well. So, that perception piece is really big for us. Another thing that Dr. Greg and I often try to address is uncertainty. And this certainly goes well beyond sales. Changes in the market, conditions, needs shift. One of the things that's really important for sales professionals is to be able to shift and flex as those conditions change and those needs shift. So we work a lot with students on uncertainty. And maybe we can't get them to the point of embracing uncertainty, but we certainly work to expose them to a number of examples and cases and role plays that will put them in uncertain situations where they'll have to think on their feet. They'll have to use their problem solving and critical thinking skills. They'll need to be creative. We really love to work around that's really critical in sales. So we work to change their perception. We work to get them at least to accept the fact that uncertainty will happen and to have a toolkit to address that uncertainty. We also work a lot with them on curiosity. What does it mean to be curious? And how can you have a mindset that's focused on curiosity so that when you're asking questions, when you're entering discovery, you're doing it from a place of true curiosity. You want to know, you want to uncover, you want to be able to help that prospect, that buyer, identify that problem and try to address that need. So we work a lot with curiosity. One of the things that can be very helpful is a little bit of journalism. Journalists are often taught to question. They're taught to look beyond just what is said. So we try to bring that to our students as well, to focus on that curiosity. And another key element for us is agility. We know that an agile mindset makes such a difference. It's not just a sales skill. Well, we always argue that sales skills are life skills. The things we learn to do to sell are the things that will help us just improve in life in general. So we really look at, the fact that there's a lot of complexity out there. How do we break it down? And how then can we flex into what we need to do, right? How can we use agility to our benefit? And how can we teach our students to be even more agile? So those are 4 key things that we look to address in our sales program at the university level. Now, I wanted to share something that maybe some of you are aware of, maybe some of you aren't, but there are a couple of organizations out there. I'd love to say Point Park is the only one doing something in university sales, but we're not. We're actually one of a growing group of schools that is recognizing just how important sales education really is. So one of the groups that has been incredibly helpful and really supporting university sales education is the University Sales Center Alliance. Back in 2002, 9 universities came together in recognition of the fact that university sales programs had value and that it would be beneficial if we could elevate the sales profession, and we could start doing that at the undergraduate student level. So this group has been very involved in supporting sales research, in collegiality among universities. So, I like to think of it as co-opetition, cooperative or collaborative competition. Yes, we all want students, but at the same time, we recognize how important it is to cooperate and collaborate in the best interest of students and the marketplace so that we're preparing students very effectively. And I'm happy to say that Point Park University is a member of the University Sales Center Alliance. Another thing the Sales Center Alliance really focuses on is universities having a sales center. And that often means not just curriculum around sales, but also physical facilities that can help students to more effectively engage in sales. So, for example, at Point Park University, we have about 1,300 square feet that includes a sales training room, which is all video capture, set up for effective grouping individual work. We have that. We have a sales conference room space, which is fantastic for not just seminar style classes, but also for team selling, or when you have other types of larger environments where you have groups involved in sales experiences. That's been fantastic. We have whiteboards everywhere. We love to do human-centered design and design thinking and really get that creative problem solving, those juices flowing. And we have 3 individual sim labs or interview rooms where it's been absolutely fabulous to get students in there and to practice their role plays. They're technology enhanced, so we can actually have students working on a role play in a sim lab, shoot it out into the sales training room, so the other students are able to view that, they're able to evaluate that and learn from it in that way. Everything can be recorded. We tend to be of the mindset that yes, role plays might be a little painful, but it's fairly low stakes. Oh, there's an image, a little bit of an image of the sales center in the interview suite. One of them that is in our Michael P. Pitterick Sales and Innovation Center. But we want students to, we want them recorded. We want the students to watch their own role plays and to do self-evaluations. We want them to really learn and grow. So having that facility, that center, has been a really great tool. In the virtual the technology that's in there, we know that virtual sales continues to increase in importance in the marketplace. So the students are able to work from those kinds of platforms as well. So great teaching tools. We also make it available to the community as well. So we have a lot of community partners that are able to benefit from space like this. Another organization that's really been supporting university sales is the Sales Education Foundation. They've been around since 2007, and they look to, I'll say certify, and I'll say that with air quotes, but they look at identifying top sales programs, both in the US and abroad. And the numbers have increased tremendously. As of 2022, they had identified 171 top sales programs in universities in 46 states in the District of Columbia, and 18 international sales programs in 14 different countries. So they have been a great resource to universities as well. In addition to compiling that information, they also provide a sales annual, which lists those universities and provides sales tools and information. They sponsor sales research, funding, and competitions, and they support university sales competitions. So that's been another great training tool. If you think about the role plays that you probably have your sales staff do, and if you don't, you probably should. But if you think about using tools like that, universities have developed sales competitions, usually with partners, with sponsors. So yeah, funding is always welcome and appreciated. But the students get the benefit of learning about an organization's products, go-to-market strategy, and then they get out there and role play. So one of the great benefits when organizations partner with universities for competitions is they're getting students who not only understand the basic sales process, but have a basic understanding, kind of like mini onboarding, right? Have a basic understanding of those products and services. So universities are really trying to take the lead in building that sales pipeline and addressing some of the challenges in the marketplace related to professional selling. And that's something that we feel really strongly about. And again, I've been just thrilled to be able to work with Dr. Greg and make this happen.
So exciting. One of the things that we are really pumped to tell you about today is that intersection between theory and practice. And with sales being a burgeoning type of thing in the university field, I know for me, I've hired hundreds of inside sales BDRs for my teams in the past. And one of the things that we noticed is when people would come and they already understood sales technology, if they already understood CRM, whether it was Salesforce or another one, if they already understood marketing technology, marketing automation, they could get to work so much faster. So if they had a quota to retire, they could learn how to do that more quickly because they understood the sales motions. So one of the things that Dr. Saletti and I really started talking about were 2 major areas that we felt would help students cross that barrier and be able to be employable and get to work faster for your revenue teams. And two of the things that we came up with were really the idea of having people who were transitioning from being amazing A players as sales individual contributors into sales managers. So this semester, we started something new where we are co-teaching both professional selling and advanced professional selling. So the students in advanced professional selling could start to learn some tips and tricks and techniques that are rooted in academic theory on how to manage and motivate a sales team. So we're using some really cool things, like there's something called Rainmakers that we've been using in our team that enables AI conversations to really drive that whole concept of selling home so that these students are coming out fully employable. One of the other things that we really wanted to share with you today that we were really excited about is the course called Innovation and Technology and Sales and Marketing. And you can see in the middle of this slide right now, Nancy's 2022 sales technology landscape. And everyone here knows the marketing technology landscape, it would be even tinier. So we introduce all of our students through this course to the whole entire concept of RevTech, so that as soon as they are ready to find their internship or job, they get it. They are on HubSpot Academy. Part of the things that they have to do for this course are take those types of trainings that HubSpot Academy offers. They are on Salesforce Trailhead. So they come out of these courses with a very solid understanding of how CRM and marketing automation work. And they are really starting to think about, how can I take what I know as a student and apply that to the market? And so we wanted to show you very quickly, and I know this is a lot of words on the slide, so those of you that are design pros out there, you're probably cringing, but we thought it would be really cool to show you how we take our students through these modules. So they take this idea and they learn about the MarTech landscape, the sales tech landscape, marketing automation, CRM, that golden triangle of people, process, and technology, the technology assessment, audit, and analytics, change management and technology, and emerging technologies. A lot of this has been driven by tons of academic research, but particularly my dissertation was entirely focused around sales technology user adoption. So really that was focused a lot on diffusion of innovations. How do you take the idea of a new technology and spread it, especially when you're dealing with people with quotas, right? If you say, sit down for 2 days, we want to teach you how to use CRM, they're going to be absolutely allergic to that. They want to be out there delighting customers and they want to be retiring quota, right? So we take this idea and say, how do you apply that then to change management? And then further, how do you start to learn in this adult learner theory way? Because we all know adults learn differently, and particularly people in sales and marketing, people who are in revenue roles, they also learn differently. They want to move and they want to move fast. So we put all of these things into play by giving our students, and again, this is a lot of words, but we ask them every week after they've learned something, what's the gap in the applications? When you think about AI and machine learning, what types of apps don't exist? Or how will current apps that people are using right now in their revenue roles need to be changed to keep up with what's happening in the world right now? If you think we were not jumping up and down about ChatGPT, you are wrong. I know we all were. How's ChatGPT going to change? We bring these conversations to the classroom so that students come out and can immediately start applying them. And because I spend most of my days thinking about productivity and revenue roles full time, we can bring this back to our students and say, okay, it's time for you to learn about this in theory, but then how will you apply this as soon as you get a job and are in a revenue role? So Dr. Saletti, one of the things that I think everybody would love to hear about is some of the practical ways that we introduce students to these technologies, these ideas, so that as soon as they hit the market, they are ready to roll.
Yeah, absolutely. One of the things that we've been doing, and Shannon is Dr. Greg has so much expertise in Salesforce that we bring Salesforce Trailhead into the classroom. We have them working on completing trails and getting expertise that way. And they will be able to use Salesforce then for some of the lead generation and sales work that they're doing in the classes, because we want them doing live selling. The role plays are certainly a big piece of that, but especially when they get to advanced selling, let's actually sell. We have them, as Dr. Greg noted, working with HubSpot and getting certifications in that way. One of the other things she mentioned was Rainmakers. And if you're not familiar, the Rainmakers is basically it's a national sales competition for university students that uses a chatbot as the basis for the competition. So it's absolutely amazing. They download an app. They're able to really work on the basic, we call it the generic sales process. We know that organizations will have their own specific sales processes that they want students to become familiar with upon hire and during sales training. So we teach them the basics, and then they're able to work on that in an app format. Low-hanging fruit, less risk for the students. They can practice 100 times a day if they want to, and they can really work on refining that sales process. So it's really important to get them out there using technologies and recognizing what technology can do. We want them to be familiar with some of the latest and greatest. We really want to get them day one ready as much as possible in using using the technology that's there, because sales is more than just knocking on doors. That's certainly a part of it, but the whole sales ops space is so critical for them, and we know that that can help them increase their time to quota. And Dr. Gregg has such great expertise here, and she's really been leading the way in technology and sales, at least at our university.
I've been so pleased today listening to all of the sessions at the RevTech Summit, which is spectacular. So thank you, Signals, for putting it on. And all of the concepts that have been discussed. I remember when I started out in my sales career, you had to learn these by proxy. You had to learn them by tribal knowledge. You had to learn them from your maybe annual sales kickoff. And one of the things that we've really been focused on is how do we deliver this knowledge so that we can send sales professionals out into the world. And one of the things that we came across last week was one of our students said, one of the things that she's learned about sales is you need to make their problem your problem. And I thought that was such a beautiful way to summarize exactly what it is that we're trying to do in our revenue roles. And none of this is done without the aid of technology, right? We know that there are so many different things. And really, if you look back at this slide, if you look at this sales technology landscape, we've got so many different technologies that will help accelerate the process so that revenue can be faster. We can capture that spend more quickly. That's exactly what we want to do. And so giving our students that exposure early on helps them get into your organizations faster so that they can really hit the ground running. I think that's one of the things that's most exciting for us, Dr. Saletti.
Absolutely. Absolutely. That's the goal. So who has questions for us?
I see we've got a question here, a comment from Austin saying, someone with a computer science degree, sales was such an afterthought and then became trial by fire. And we do see that a lot, Austin. You're right. People who are subject matter experts, who are maybe pulled from delivery or operations into sales, they know their product or service better than anybody. But the whole idea of learning the sales process, the marketing process, the go-to-market process, and then adding on top of it all the technology aids that you have, it becomes really challenging, right? So when we're thinking about how to encompass all of these things and make sure that we're doing what we do best, which is become trusted advisors to our prospects and clients, it is a whole huge world, no question.
Yeah, and research from the Sales Education Foundation found that about 70% of business school grads will start their career in sales, and about 50% across the university, regardless of major, get their start in sales. So we know that even though not all students will be targeting a sales career, many of them, if not most of them, will connect with sales in one way or another. So it's really important for us to give them that preparation so that they are ready to go.
That's great. We're running low on time. We have QR codes here for you to reach out to Dr. Saletti and or myself. Please connect with us on LinkedIn. We'd love to take any of your questions. We are also always looking for people to present to our students. So if you'd like to zoom in and talk to them, we would love that too, because the more exposure they have, the more critical their experience is going to be so they can get to market and hit the ground running, right? We know from our years of working with salespeople, with sales managers, that one of the biggest challenges is you have to look at those three different things, the people, process, and technology, enable them with all of those, and then also think about the industry that they're in, the product they're selling to, their ICP. There's so much to it. Sales is such an incredible and challenging field, and marketing is even more complex. So when we're thinking about revenue and revenue technology, we really want to hear from you. So if you've got questions, comments, or would love to zoom in and talk to our students, we would love to do that with you.
And I do see, to quickly answer Derek's question, do you have sales management courses? Yes, we do have an undergraduate sales management course. And so that's something that we continue to evolve, because we recognize that while entry-level students or entry-level professionals won't necessarily be working in management initially, eventually some may go in that direction. And we also think that having that understanding of sales management helps them be better sales reps, because they understand what the managers are expecting and what they need to have in place.
That's awesome. Well, thank you, Dr. Saletti. Thank you to Signals for hosting the RevTech Summit. It has been a beautiful day, and I'm looking forward to even more amazing content.
Thank you all.
Thank you so much, Dr. Greg and Dr. Saletti. That was an incredible presentation. If you'd like to learn more about Dr. Saletti or Dr. Greg, we recommend following them on LinkedIn to stay up to date about their publications, their courses, and everything that they're offering with their vast knowledge base. Up next, we have our final block opening up. We're excited to announce that William Tyree, the CMO of Revenue.io, and Jake Spear, the Director of Sales, will be having a presentation. Additionally, Logan Mallory, the VP of Marketing at Motivosity, will have one. You can hear from Joel Premack, the co-founder of Revenue Era, and Ali Kerr, the head of community at NFX. Zach Barney, the co-founder of Mobley, will have a presentation. And finally, Jonathan Kennedy, VP of Sales, and Nicole Goldstein, VP of Operations at Simply Direct, will be presenting together. We're excited to have our final live session from John Russo. John Russo is a 3-time global chief marketing officer in successful public and private SaaS companies in Silicon Valley, New York City, and Luxembourg. Today, he leads B2B Fusion, an agency designed to optimize marketing technologies and business processes to drive revenue growth with an expertise in revenue conversion optimization, and over 100 account-based strategies. John, I'm going to add you to the floor now.
Excellent. Thank you very much. And just having a little bit of a technical challenge here to share my slides, but as I'm getting my slides up, and it really shouldn't be a technical challenge, but as I get these slides up, I just wanted to talk a little bit about background here, and grateful for Signals for putting this on and that kind introduction. It's never been a more challenging time right now for marketers, BDRs, sellers, and I've seen both sides of this equation. I've seen it in companies where, as Nicole mentioned, I've been a head of marketing in companies that have scaled. I've been in a couple companies that have been acquired. And to give you a revenue size, 2 to 50 million, 50 to 200 million, I was head of marketing in both of those situations. One got acquired twice. The other I helped take public with a few others as well. So that's on the positive side. On the challenging side, and I don't readily admit this, but I think in this kind of time period, it's important to talk about, not all of my career has been successful. I have had situations similar to now in this economic climate where either my division was laid off and I was part of that layoff, or perhaps I didn't work out as a CMO. And so one of the reasons I didn't work out, and one of the lessons that I learned as part of that, is really to maximize the reporting and understanding the impact that not just marketing has, but what the business looks like. So today, I'm really helping other marketers with their journey, and my company really helps other marketers with their journey because it's really so challenging for you right now. And we want to make that challenge a little less challenging, because we've kind of seen both sides of the coin. We've seen the successes, and we've experienced the not so successful areas. And speaking of which, I'm still having a challenge pulling up my slide here. I'm going to try one other thing that should pull it up. There we go. There we go. Now we're cooking. Excellent. So I've got more slides than I do time here, and I will try to move through some pretty meaty concepts somewhat quickly. Always open to conversation afterwards. So if there's a concept here that doesn't quite resonate and you want to follow up, I've actually included my Twitter handle throughout, and I've got my contact information at the end as well. Starting off, and let's see here, it's not flipping over to the next slide yet. Nicole, do you see the next slide that says expectations, or is it stuck on reporting? There we go. Okay, maybe it's an operator error. I've got two different screens here. So just to set expectations in terms of why this presentation may be valuable to you, or it may not be valuable to you, but I'm hoping that it is. If your company has two or more go-to-market motions, meaning, and I put as an example, lead, product-led growth, channel, ABX, insert your motion here, then this conversation for the next 25 minutes will be relevant to you. If you got a tech stack that either has or you're contemplating an ABM platform, that too may be very relevant for you to tune into. If you have challenges in and around the reporting side, and we're going to dig into this ad nauseum, this conversation today will be very relevant to you. And probably the buzzwords that a lot of us are experiencing right now are kind of the efficiency and productivity. And if you're concerned about that from a sales and marketing perspective, why this is going to resonate is we're going to talk a lot about how to think about it in terms of a framework to your CFO or that internal conversation. If you don't fit into one of these categories, your 25 minutes are probably best spent elsewhere. But I'm hopeful that something here resonates with kind of your area or your knowledge quest that you're on today. I'm going to try to, I had a problem with presentation mode, so let me try to blow this up as much as I can. So on the industry side, and there's a lot of words here, but we've been doing this type of consulting, I would call it for the better part of 10 years. And in those 10 years, we've heard kind of repetitive themes, which I've outlined here, of the challenges that a lot of companies face right now. And without reading word for word, if I were to capture the spirit, a lot of people are having challenges with the measurement of marketing, BDRs, channel. Marketing could be an account-based motion, a lead-based motion. How do we even think about that? And when account-based was introduced to the funnel from a marketing perspective, it really put a lot of organizations on its ear. In our research, about 7 out of 10 companies use the leads object in Salesforce. That number's been pretty consistent over 10 years. And it makes it really challenging, which I'll get into in a moment. But the biggest challenge is you can't really do the attribution or figure out what's happening there and getting good quantitative analysis of connecting impact to revenue. And you see that issue not just with marketing, but with BDRs, with partners. It's really, really challenging. Now, you will find some companies out there saying, hey, we've got Tableau, or we've got Domo, or name that flavor of BI tool. The challenge that we see with this, and we look very closely at the productivity of the BDR function in particular. And the reason we look at that is if your BDRs are not productive, then you may as well not be in business. You're spending a lot of money on marketing, perhaps on an account-based motion, and your BDRs don't have the ability to execute or understand the signals or the intent data or how to interpret the information, then you've just wasted a lot of marketing energy and effort. So really looking at that BDR productivity is pretty important. And Tableau and Domo, it's like an island of information. It's really great for the executives, the non-marketing executives in particular. But I guarantee if you ask one BDR how Domo or Tableau or any kind of visual capability has helped them close business, I would bet a lunch or a dinner that you would be very challenged to find somebody who could say it's been helpful. It takes a lot of time to sometimes analyze the data, and it's not necessarily in their workflow. So we've seen that as an issue. And then we've also seen a lot of companies that are moving toward this ABX direction, kind of challenged on how to operationalize ABX in terms of getting the value or time to value quickly as an issue. And those are consistent issues that we talk about. But I want to do a deep dive here into how to think about frameworks to frame up why this is an important issue. And the common question that a lot of people may be getting right now, and by the way, my Twitter handle B2B CMO, I would welcome any feedback or any tweets that you might have there. I don't know why I didn't carry through here, but B2B CMO is the Twitter handle. The common question that a lot of us are getting right now is making the business case. Like, why should we be looking at this right now? And you really should be looking at just about any initiative as far as what the impact is on efficiency and productivity, more so now than ever before. And I saw this back when my hair was jet black in 2001 and 2008 as an operator. Now, I will say in both of those scenarios, I had companies that successfully exited out of those scenarios. And, I was a part of that. A lot of painful lessons learned in terms of the transition. But once the transition got done, it was like a real opportunity for growth and scalability. So the time and energy that companies spend right now on the productivity and efficiency will pay off in spades. Maybe it's 6 months from now, maybe it's a year from now, but it'll definitely pay off. So let's talk a little bit about the 3 opportunity costs that I would use as framing up as to why to look at reporting as an issue. And a lot of us on this call, if you are familiar with Salesforce.com and its architecture, and as a CMO, former CMO, I never thought I would dig into architecture of Salesforce.com. But a lot of this has to do with the workflow of how people work in Salesforce and how you're trying to do the conversion. And what we've discovered is there's a lot of issues right now with the leads object in Salesforce not being related to any other data in Salesforce. It causes all sorts of productivity issues. Having said that, and I wrote an article on CMS Newswire, which if I get time at the end, I'll see if I can publish, or maybe Nicole, if you're still listening, if you just Google John Russo CMS Newswire or MQL's dead. There's an article that I kind of gave pros and cons of different architectures, of which the leads object is one of them. And really the challenge is from a BDR perspective, a lead is like a signal. It's just a drop in the bucket of water or drop in the ocean of there may be some interest within an account. But then the BDR has to be like private detective and synthesize a bunch of different signals into something that they can use. And there's a lot of time that's lost in that. So one opportunity cost is the way the architecture is built in Salesforce is really a pretty significant headwind on sales and marketing productivity. And I'll detail that out in this next slide. There's a lot of words on it just to give you a heads up. But because all this information is scattered, it's like trying to put, from a BDR perspective, Humpty Dumpty back together again. You're trying to grab all these different pieces of the pie, and you're trying to assemble it in a way to say, this account, General Electric, or this account, IBM, has interest in my product. And the prior modern day systems really don't have that capability because they're all very lead driven. Enter the chat or the account-based platforms, which presumably solve for a lot of this issue, but they don't solve for it all the time, depending on which platform you're using. So the long and short of it is, we would suggest spending some time thinking about the sales and BDR time in terms of how are your people spending time in systems, and if they could get some time back, like if you really address this from a process perspective, how much productivity could be gained on the other side of the equation. And that's the orange bang box at the bottom here. So I could go through each of these bullets. I won't. But what I'm trying to do is frame up ideas on how to think about presenting to your CFO to say, hey, we should look at reporting because we think there's a deal or two upside here. And, you know, the equation of multiplying your ACV times the number of deals. Now, it's got to hang tight, though. It's got to be credible. And that's why some of these supporting bullets become pretty important to really look at how your sales and marketing activity is happening with this lead and account function. The second area to kind of take a look at is really the overall sales and marketing productivity here. And again, you really have to kind of think about how does your sales and marketing team work today? First of all, I can, you know, as I talk with a lot of companies today, there's been a lot of cutbacks across the board, sales, BDRs, marketing. So almost everybody has got a fuller plate right now with much fewer resources to get the same amount, if not more work done, which is kind of a ridiculous equation. But if I were presenting to a CFO to say, hey, we really ought to take a look at this reporting because it will help us understand how the business is growing, a way to be looking at this is looking at how your sales and marketing team are working. And you'll see here, I've included a couple links around the LinkedIn 2020 State of Sales report. So that's pretty fresh. There's another report here that I pulled out, and it's from a lesser known resource, but where BDRs are spending 2 hours a day updating tasks. And so quantifying those tasks of saying, hey, if they could just save 15 minutes or 30 minutes or some period of time, that's a big deal. And bringing to the CFO the actual market data of this is what it's costing, or better yet, tailoring it to your situation to say, hey, we're spending a lot of time and that time could be better used to convert or in higher value add activities. Now, on the flip side, the last two bullets are really marketing specific. And for the marketers that are familiar with reporting, we typically see one of two scenarios happening where marketers are asked to generate information, generate reports, and they get a question, and it takes a lot of time to kind of piece that together. And sometimes you have to have a dedicated person, which very few companies have that luxury, kind of in the mid-market. Maybe in the enterprise they have that luxury, but in the mid-market they don't have that luxury. If you think about the time and energy that it takes to synthesize reports, there is a lot of time and energy. And I'm going to show you a better path here or a suggested path around that. But that too is an opportunity cost that person could or should be in the higher value add activity of interpretation of the information instead of the assembly of the information. The last bullet that I'll mention, and gosh, there's so many, not just our clients, but prospects we see in this situation right now where sales tech and MarTech, the buzzword of the day is consolidation. And they're looking at ways to cut costs. Nobody wants to cut headcount, but when it comes time to technology, they are looking at it. And I'm sure a lot of you have felt some of this pressure already where you're looking at your tech stack saying, hey, is there a sponsor here? Are we getting the ROI? Are we getting the time to value? So a lot of this is probably duplicative to things you already know. But if you don't know, taking a look at your total investment, both from a people perspective as well as the systems, and really thinking through, are you getting the full utilization of those platforms? If you're not, then you're leaving potential money on the table. And it could be an opportunity to save costs or make the technology work better with better integrations. The proposed approach that I'm going to share with you, what we're suggesting is utilize your existing technology, Salesforce.com, which is a large percentage of the market, and hopefully a lot of you listeners today, to do this reporting. So use existing technology to do the reporting of any go-to-market motion. I'll show you some schematics around that. rather than introducing more MarTech that somebody else has to run, take advantage of your existing MarTech and make sure that it's utilized to its full capabilities. All right, let me move over to lessons learned here. And the lessons learned are really over the last 10 years. And in particular, another quick story. I won't mention the name of the ABX platform, but I, about 5 years ago, entered into a unique relationship with one of the ABX providers, and we did about a third of their customer implementations. And I never woke up and said, hey, I want to be the best ABX implementer. But what I learned as part of that was the measurement side of account base. And we really feel like we've got probably 5 more years of knowledge in this area than most others, because we've studied it over literally hundreds of companies. And what we kind of learned in terms of lessons on this is to really improve the productivity, you have to present action-based insights in a scalable, repeatable way. And if you don't, the challenge is, again, from your BDR perspective, you're trying to grasp a lot of information, notes that you're putting on your account, on your leads. Your notes are everywhere, and they're not focused in any one area. By focusing it in one area, it becomes a scalable, repeatable process. So the BDRs can package the information up. Let's say they get a qualified meeting, they pass it over to the AE, to actually close the deal. And all of the information is presented holistically. So you're saving time from BDRs and different objects in Salesforce. You're packaging it up, and then you're presenting it over to the AE side. We've also learned that when you're introducing ABX, it's another go-to-market motion, and you really have to get time to value out of that investment, or really any go-to-market motion you have to get time to value on. So we've learned a way to synthesize any go-to-market motion in one funnel in Salesforce. And the advantage of that is really one of time savings and cost savings, because you're presenting all that information in one area. It's driven by that scalable, repeatable BDR process, and one feeds the other. So we've kind of learned that as well. It also helps improve the forecasting capabilities by having your information in one centralized location in Salesforce. We've seen clients that have actually done real-time forecasting. So not like pulling stuff out in Excel and trying to figure things out, with the ability to actually forecast based on real-time data that they see in Salesforce. So that's a pretty major thing. And then just kind of data-driven decisions as part of their scenario as well. We've all seen a bunch of funnels before. This is probably not new, schematic. And you've seen the bow tie with kind of the acquisition side and the cross-sell, upsell side. But to us, it's really measuring any go-to-market motion right now. And why this is important is, from a business perspective, you as a sales leader, a marketing leader, a BDR leader, somebody has to be the steward of the pipeline. Now, typically we suggest heads of marketing be the quote unquote steward of the pipeline, meaning you're kind of seeing how the different channels perform from a volume and a velocity perspective. By bringing everything into one funnel, not multiple funnels, not a dual funnel, not a triple funnel. And if you go to my website, I talk a lot about this on my blogs, but really bringing it into one view of the different go-to-market motions from the top of the funnel all the way through the closed one and cross-sell, upsell, it begins to paint a picture of which channels are performing the best and where do you put the resources from a company perspective. Now, this goes back to what I was sharing at the very introduction here of scaling companies, because I've been in that scaling room before. And you want to make these decisions data-driven as opposed to just guesses. With this information, you can then become data-driven to figure out where to place smart bets. And that's what I think you're going to see coming out of this economic climate, is companies are going to begin to be in a situation where they can only make smart bets. They're not going to be able to keep cutting forever. This will eventually turn around. And when it does, people are going to want to make those smart bets. And to do that, you've got to have the data to make the data-driven decisions. Let me give you some, I'm going to give you 3 examples of dashboards that redacted dashboards of client work that we've done, not to sell us, but to kind of present a story of kind of how we think of things. And maybe some of this resonates, maybe some of it does not. But on this first piece, remember how I said being the steward of the pipeline is really important. I took a tile out of Salesforce dashboard, and remember, we're doing everything in a unified funnel. This particular market motion had multiple different inputs, which you'll see on the left-hand side: inbound, alliances, engagement, sales development, co-development. Those are their definitions. So there's some definitions and process that has to be put in place. And when they do put that process in place, you can then connect the activity to what actually closes. And why that becomes important is, again, the smart bets scenario. You can begin to paint a picture of what's working, what's not working, and it just enables you to really do the smart bet approach when someone is the steward of the pipeline. And again, our suggestion would be the CMO be the steward of the pipeline. I think gone are the days, and I differ from some of the industry pundits, including one that named me as a top 25 person to follow in the marketing industry. I've got a lot of respect for, but I differ from this person where I do believe that sourcing is a leading indicator for any go-to-market motion, including marketing. It's less about the credit and more about the narrative about what's working and what's not working across your multiple go-to-market motions. And when we poll our customers, we typically find the same thing, that they do want to measure sourcing. They also want to measure influencing as well, but sourcing hasn't really gone away. There are some in the industry that say, hey, you shouldn't be doing it. I am probably not that person. I think it is a leading indicator, and for a 6 to 18 month sales cycle, as a former head of marketing and someone who consults with other marketing leaders, I would advise keeping that as a metric for any go-to-market motion, because these sales cycles are just too long. Otherwise, you're waiting forever to see what actually pans out on the pipeline. But I do agree that we should be connecting the activity to the pipeline side of things. I mentioned that the BDRs are probably the single most important function in the entire organization. And the BDR function to me is the one that has the ability to execute, particularly on if you're embarking on an ABX approach. They have the ability to take your account-based initiative or your accounts that are qualified and then hand them over to sales. And there's a lot of process behind that as well. But when done right, it can be very, very effective. Now, we've gone through with clients, and I kid around, I say, the MQA that marketing creates is a perishable type item, meaning by the time you hear that something is qualified from a marketing perspective, there's only a short period of time or window typically that you as an organization from a selling perspective can respond to that. So we always encourage, and this is another dashboard that we helped create, is putting those SLAs in place to really check and balance with the BDR function to make sure that they're executing on the MQAs. Now, there could be a couple different camps here. We have had some clients that have said, hey, my BDRs are producing so much that they don't need marketing. So this is the kind of dashboard that will show that. And it'll immediately illuminate the need to kind of pivot the marketing or pivot the alignment between marketing and the BDR function. Or it may say that the BDRs may need to do more work. We're running out of time here, but I'll do one quick last slide. And I mentioned a key challenge that a lot of enterprises have is the scalability of the BDR function. And one of the things that we've learned is really trying to present their workflow in a scalable, repeatable fashion in a way that they capture all their notes in one area. So when a marketing qualified account does come into the system, they've got one centralized workflow. We've simplified it. Marketers have a tendency to make things very, very complex. And by simplifying it, this actually feeds the unified funnel in the reporting. So it's one hand is working with the other hand very, very closely, and it really thinks about the workflow of the BDR. Many of my fellow marketers, including myself, I am guilty of this. I never really thought through, and I owned a BDR function, cold to qualify and cold to close. I never really thought through the workflow area until I had my agency. And the more I looked at it, I'm like, wow, there is a lot of efficiency and inefficiency here, going back to my earlier statistics. So I'm going to wrap up here. In my presentation, there's a number of BDR and SDR resources, which we'll link to. And I did include, I don't know if it went through or not, Nicole, I sent it, I think, to you, the article, the CMS Newswire article. You may be able to punch that out to everybody. If not, we can send it up as a follow-up. And, I've got my contact information here. If you have questions, I'm certainly open to them. We got a couple minutes left here. Worst case, my contact information, I'm happy to do a follow-up if you have further questions.
All right. Thank you. Thank you so much. I appreciate it. That is our time today for the event, for the RevTech Summit. Again, a huge thank you to all of our speakers. Again, with time, we do move at a pretty fast pace with all of the live streaming that we've had done today. If you have any questions, I'm sure they're more than happy to connect with you via LinkedIn. And please ask those questions. We will be having all the content that you've seen today and that of the exclusively pre-recorded presentations available on demand access for at least the next 14 days. So if you want to come back, take a look at it, share some links or some insights with colleagues, coworkers, and so forth, please feel free to do that. I also want to do a special thank you to Tenbound and VIB as our sponsors for this event. So happy to have them join us and to work with them on sharing these insights and strategies, bringing together collective of knowledge from industry experts. I'd be able to share these with us as we go and continue on into 2023. Finally, I want to thank our team here at Signals. A lot of work put in to hosting these events, putting them all together, coordinating and getting the right things out. So a huge thank you to everyone, both working on the back end side of things and that on the front end. We will be having an ebook posted out that'll compile the top strategies and insights from the speakers that could be shared or that will be shared out here in the next coming days. As well as if you've taken the survey, there's going to be a RevTech survey benchmark study. So if you haven't had a chance to take that, we still have that open through the end of the day. Please feel free to participate. And then if you do, you'll get that study. I'll be among the first to get the study and see those results. Thank you again. For future events, Demand Gen Summit is in May 17th. Follow us on LinkedIn. That's Signals on LinkedIn, or you can visit us at our website, getsignals.ai. Learn more about what we do, upcoming events, and any questions, concerns, please address them toward our channel. Thank you. Have a wonderful day.